What's up, chat? We're back after losing a bunch of money on Carvana. Now we're back for redemption. It's Opendoor, baby. We're gonna make it all back today. Just you wait. We're gonna make it all back today, chat. Started the stream up a little bit early today. I don't know why. I just didn't hit the gym or anything, so here we are. I guess let's get right into the news. What's up, Muma? What the hell? You don't have permission to access NASDAQ market activity. What? Since when? What is going on there? You don't have permission to access NASDAQ market activity earnings on this server. What does that even mean? Apparently I can't look at the earnings calendar anymore. Hopefully that fixes at some point. That's kind of annoying. Did they IP ban you? I don't know. I don't know why they would. Doesn't really make any sense. It's just an earnings calendar. Like, I don't know. Hopefully not. I mean, I'll just find another website. It's not a big deal. There's probably 100 other websites that have the same calendar. So not that big of a deal. They're protecting you from more losses like Carvana. We're betting it all on Opendoor, baby. We got the fresh loan out. We're making it all back today. We got the fresh loan. So many people actually took that clip serious. I think that shit's hilarious. So I'm definitely going to do it again. Until it stops being funny. You know. Once it stops being funny, I'll stop doing it. But I think it's hilarious. People actually took that serious. I'm like smiling the whole time. I just think that's so funny how serious people took that. All right, let's look at some economic data, I guess. Exports kind of down now. The market's low-key kind of flipping bearish. I don't know if if the market really sells off in the next week or two, it's low-key kind of bearish. You're going to hit a lower low on all the indexes if you don't have like a pretty decent rally coming up. You know, whether that affects GameStop or not, I guess we'll see, but probably will. Imports up a little bit. Jobless claims refer to actual number of unemployed and currently receiving unemployment benefits who filed for unemployment benefits at least 2 weeks ago. Wow, that's going up. That's probably not good. It was up massive. I actually haven't looked at this, but yeah, that's been up a lot. Went down after the at the end of 2025, but it kind of seems like it's trending up in a lot of ways. I guess we'll see. Might be worth keeping track of that. What is this? Just a survey? Yeah, I don't really care about surveys too much. I don't really find them valuable. Sometimes. Depends on what it is, I guess. Pending home sales are flat, basically. Kind of down. Month over month. Let's see, year over year. Yeah, kind of down. It's flat. not as bad as 2023, obviously. So I really think real estate's gonna have a comeback, bro. Especially if the market flips bearish. Like, people are gonna start buying real estate. Oh, mortgage rates just hit a new low. Yep. Brand new low on the 15-year. Yep. Dude, real estate's gonna make a comeback. I'm telling you, bro. I'm telling you, bro. Real estate's coming back. Out with the crypto and the stocks. Well, maybe, you know, like I said, if the stock market has a rally in the next like week or two and doesn't hit that lower low, you know, it'll still be bullish. But if the market starts turning bearish, I mean, it just goes to show people are rotating into real estate straight up. That's, you know, in my mind, that's what I see, because to me, the market's not bearish, but the shorter term price action is becoming bearish and real estate is becoming more positive, you know, with lower rates. You can already see in the home sales, you're getting relatively more home sales. It's not down as much. So real estate's going to make a comeback for sure. Real estate's going to make a comeback. What's up, Grady? Market rotating into Pokemon cards. No, that was like 6 months ago, year ago. Real estate's the only thing that hasn't had a comeback yet. Pokemon's overvalued as fuck in a lot of ways. You got an insider buy on Microsoft. 2 million, I think. I don't want to watch this. I don't want to watch this ad. I'm just trying to look. Lyft got a small insider buy. Some other ones. What I hear, new construction, at least in Minnesota, has been delayed hard to find workers, and the ones that will work are overbooked. I've seen houses that's sitting half done all winter now. Oh, that's crazy. Where I live, bro, there's shit popping up everywhere. So maybe that's just a Minnesota thing, especially with all like the riots and stuff, potentially, maybe. But yeah, where I live, bro, condos, apartments, houses are popping up, brand new ones, like every week, every month, bro. Like, it's crazy where I live. But, you know, if it's like that in other places, that's just another, you know, that's another potential catalyst of why real estate's gonna boom. What's up, Jared? Did my chat get deleted? I don't think so. I don't think so. Oh yeah, I did see Berkshire you finally got the 13Fs on a lot of these funds, so maybe we could look at that here in a second. It's not, oh shit. Crypto still down. Market's below 2.3 again. People are still buying the dip on crypto though, which I find insane. You know, maybe it does come back. I don't know, but I'm not crypto guy. I don't like crypto. There's demand. It's just new houses are like 400K and up. Not many used ones as of yet. Pent up market. Yeah. Pretty interesting. People got to trade up, sell their house, and get entry level houses back on the market. Let's see, U.S. trade deficit totaled $901 billion, 2025. Trump, dude, oil's been crushing too. There's also, you know, potential attack on Iran that probably kind of spooking the market, but in a lot of cases, war isn't bearish. King Charles' brother Andrew arrested on suspicion of misconduct. Apple sued for alleged failure to stop CSAM on iCloud. Walmart reports strong holiday growth, but earnings outlook falls short of estimates. OpenAI and Anthropic rivalry on display as CEOs avoid holding hands at AI summit. What? New Balance, quote, dad shoes are beating Nike as sales surge. Let's see. Not much news today. DoorDash stock rallies as investment cycles start showing signs of payoff. Wasn't DoorDash stock down 20% the other day? Okay. There's not much news. Kind of a slow day. I do have a stream clip though. Charlie posted a video about AMC, and I think that's kind of funny. I think that could be potentially a good stream clip. I don't know. We'll see. I guess I started the stream a little early for how little news there is. I just didn't feel like going to the gym, honestly. Jeez. Family takes relative's dead body to the bank to prove they're really dead. Jesus Christ. That's insane. I might stop scrolling through like this gaming news and stuff, honestly. I might start focusing more on just like financial shit. Though I'm like interested in this space and I like to keep up with it. I might stop like talking about it. I think I just don't think this stuff is valuable to the stream, honestly. Like it does, you know, it's a little bit of content, some stuff to react to and talk about, but like overall, there's really no value reading a lot of this stuff. So potentially I'm going to stop with like the gaming news and stuff. Focus more on like financials and economics and, you know, maybe go back to researching companies like we were doing when I first started the stream. I'm just not really finding any value in this gaming news. And I don't think a lot of people who watch the stream really like it either. I notice when I start going through a lot of this news, people leave. I just feel like most people are here just for like stocks and stuff like that, potentially. Maybe not. But personally, I'm just like, I'm not really finding any more value in this. I just don't know that I care about gaming that much. It's mostly just the scrolling. Like there's just so much. Like there's just nothing here. Like I'm not interested in any of this really. The hassle I have seen, people are cooked with their monthly, they can't afford it. I have like 4 people now that are just trying to get their situation right to buy. Yeah, that's fair, but that's a small sample size, you know. There's a lot of money out there. But yeah, for people who are struggling, you know, going and getting 6% on a mortgage of a $400,000-$500,000 house, like that's like $3,000 a month or some shit like that. I don't. Mortgage amortization calc. It's a lot. we'll be generous. We'll do 350 because you'll do the down payment as well. Yeah, that's like a little over $2,000 a month, but then you have your utilities and property taxes and all that. So, probably closer to 2,500, 3,000 a month. And then you have a car, you have a fucking, yeah, buying a house is kind of a joke if you're not just buying it straight up or you're not making a ton of money to be able to survive the large payments for the next like 2-3 years before interest rates go back to like 4%. Because at 4%, the monthly payments are only like $1,600 a month. So that's a pretty, not a huge difference, that's only like $400 difference, but if you're struggling, $400 is a huge difference. Kind of funny, it's a GameStop stream mainly and not many gamers here. Yeah, pretty much. We got a wide variety of people in the stream, for sure. Like, whenever I start up a Rocket League game, everyone leaves. So it's like, I don't know why people watch this stream, actually. I don't really know why. Still kind of learning, I guess. HOAs. Yeah, there's a lot of those, but yeah, I would never buy an HOA or a house or a condo. That seems like a joke. That seems like a joke. If you're gonna buy a condo, you might as well just buy like a duplex or something. Essentially the same thing, but at least you can benefit from the other spaces. I don't really understand I would never buy a condo. It seems ridiculous. Average car is like 50K. They're still cheap cars. You can get a Toyota Corolla for like 25, 30. Camrys are probably like 30, and Camry's probably like potentially the best car you could buy. There's a lot of cars that are around like 25, 30. I guess we'll do 25. Yeah, so 21 bands, taxes and stuff, probably 25. So, if you're buying a nice car, sure, or a truck, then yeah, it's definitely going to be over 50. A truck's probably going to be like 80 to 100. But yeah, there's still decently priced cars out there. And you could, realistically, you should probably just buy a used car anyway. I don't think it's really worth buying a brand new car. I've bought a brand new car before, and I literally sold it in like a couple months because it's just a joke. Like I don't know. I don't find any value in driving a nice car. Some HOAs in Minnesota are $800 monthly, $350 is the average. From what I hear, HOA board members misuse funds. They don't factor in inflation. Owners have to come out of pocket to cover the overage. Yeah, screw that. Screw that, bro. That would suck. You also don't own a house in an HOA neighborhood. You own the fixtures within. If they fail to manage the roof and it leaks or whatever and it causes damage to the inside, that's on you. Yeah, and if like you have like a leak or something, like you need to do something with the plumbing or basically any maintenance, you have to like get it verified by the HOA because it has to be to the HOA standards. You can't do like custom work. Like you can't be a DIY person and fix anything in your condo because This is what I've heard. Obviously, I don't own an HOA or a house in an HOA, but yeah, like if you're in a condo or something with an HOA, you can't even do your own maintenance. You have to hire the person they want you to hire, because the work has to be to the standard of the HOA. They want everything to be the same. They don't it's yeah, it's a joke. I would never buy anything with an HOA. HOAs are basically horrible insurance policies. I don't even know if they're like insurance policies though, because you're still just paying for everything. Micro dictatorship. That's more accurate. I would say that's more accurate. Buying a new car is basically a public service, incurring the depreciation of others' behalf. Yeah, I mean, the second you drive a brand new car off the lot, it loses like 10-20% value. I just got lucky because I bought my new car right before the pandemic, so and Toyota started cutting production, so my car actually became more expensive than when I bought it. So I just got lucky. But yeah, I'm glad I learned that lesson, because I will never buy a brand new car unless I'm like a multi-millionaire and I want to buy something that's like an investment, or I just don't care. That's a totally different story. But to go into debt to buy a brand new car, that is actually dumb, bro. I feel like that's not a good idea. Personally, if you want to do that, that's your life. You do whatever you want. I hate debt. I'm not a fan of debt. I think people don't respect their financials, and they just stack up debt, and they'll never get out of it. You're never going to get out of $10,000-$20,000 in debt making minimum monthly payments. It's just never going to happen. So I don't like debt. I think debt's a joke. It's a scam. It's a home ownership without the fear of mowing the lawn or maintaining the siding or windows. HOA, though, will eventually get to a monthly so high it becomes a detriment. Yeah, they do raise the HOA fees like every year or every couple of years too. Yeah, I would never want to do it, bro. I think like a cabin is potentially a little bit different. Like if you're in a community, maybe that's a little bit different, because you're paying for the maintenance of like the roads. There's a lot of like cabin-esque communities where they'll snowplow the roads during the winter. And, I feel like that's a little different, but like an HOA in like a residential neighborhood, I think that's kind of a joke. I would never want to, I just wouldn't want to deal with it, man. I just really wouldn't want to deal with it, ever. Early stream, love to see it. What's up, Moose? Early stream, I didn't go to the gym. I'm being a slacker. That's basically all the early stream means. Or, I could have potentially went to the gym in the morning, but I just haven't been doing that lately. It's been too cold, honestly. I'm a pussy. I hate the cold. Personal vehicles, new or used, provide pretty dubious value to most people, especially when you consider that they sit idle the vast majority of the time for the vast majority of people. Yeah, but for a lot of people, you need a car to go to work. So, like, the car is a huge part of the economy. So, if you have a job that's quite a bit away and you need a car, that's a totally different story. But to go in debt for a car that you barely ever drive, I think that's insane. I think that's actually insane. And I know a lot of people that have done that. And it's just the more debt you stack up, the more bills, you're just putting yourself farther behind, and you're just never going to get ahead if you don't start focusing on it. And most people don't, bro. Most people just pay the minimum payments and they'll never get out of debt, because by the time they even get close to being out of debt, they're just going to find something else. Literally. I've seen it a million times. Chat. People get bad advice from people who don't know what they're talking about. Literally, like, it's crazy, man. Like, I don't understand. Even if you respect someone or you love them, it doesn't mean they have good advice. It doesn't mean they know what they're talking about. But for some reason, people can't see that. And it's kind of sad. It's kind of sad. I see it in my own life, you know. I see it in my own life. And it's just sad, bro. Tesla was salvaged, great deal on those, but the circumstances have to be right. Traded my RAV4 for it. Homie's friend's mom got rear-ended. They bought it back from the insurance and had it fixed. Oh, that's kind of cool. But if you ever go to resell it, you're like gonna basically get nothing for it. But since you got a good deal, it doesn't really matter. But if the Tesla, whatever it's called, the robo-taxi thing becomes a thing, that Tesla will potentially be an asset, you know? You could have the autopilot go and do basically Uber for you, if that ever really becomes a thing. So, you know, that could be an asset potentially, just not right now. But I'm sure you love that Tesla. Like, I can only imagine. I can only imagine how fun that is to drive, and you need it. You know, you gotta get to work. You gotta go do your Pokemon cells and stuff. So you need a car. And you're aren't you a real estate agent now too? So if you ever get like a real estate deal, you know, pulling up in a Tesla, that looks good. My car's starting in -22, so I'm happy with it. There you go. There you go. That's awesome. Dude, it blizzard yesterday. It was snowing crazy here yesterday. I was like terrified driving home from the gym. Don't get me wrong, I understand why people own cars, especially in America. Even in a major city like Nashville, you need a car. Nashville is not really walkable. Yeah, for sure. For sure. But, you know, do you need a $30, $40, $50,000 car? Shit. Even people, like, there's a lot of I've seen people buy like $10, $20,000 cars. Like, do you really need that? You know, especially if you're broke. Like, buy like a $5,000 car. Buy something like chill. Like, you know, buy a beater, bro. Buy like a $2,000 car. Stack up. Stack up. Come on. What happened to stacking, bro? What happened to stacking? Nobody wants to stack nobody wants. I don't know. I don't want to harp on this, man. I don't want to harp on this. I just want to see people succeed, but people are doing the exact opposite of succeeding. And it just sucks to see, especially when it's like people you love. It just hurts to see, because nothing you ever say will ever change anything, because of maybe it's the way they think or the influences they have around them. But it's, yeah. I'm 13K into a 2020 with 30K miles. Crazy come up. Yeah, that's dope. But just the salvage titles, you know, basically make the car worthless in a lot of ways. Not really worthless, but like, it's just the difference between a salvage title and a clean title are crazy. Like, For example, let's see if there's a lot of salvage titles on here. Like let me see if I can find something. Like a BMW i8. This is probably like the most. A lot of people crash these cars, but there's only 4 on this website right now. See, like this 25. I bet this one's well, maybe, but this one's probably salvage. 45,000 for this one. It is pretty old. Nope, clean title. I haven't looked at these in a long time. They could have lost value. There's a lot of the cars I used to look at, people don't really have them anymore. They're hard to find. Maybe a GTR we could see. Yeah, these are probably all clean. Well, maybe, yeah, this one's probably clean. I don't know. You could do the research, but usually like salvage titles are over like half the price of an actual car. So like you could find like a really nice car with a salvage title for like really cheap, but something's wrong with it. And the resale value, you know, like I said, if you ever had to resell it or wanted to resell it, you probably wouldn't get like one, you definitely wouldn't get what you want for it, and 2, it would be really hard to sell because people do not like salvage titles. Yeah, and that was kind of, I think, why they did that. Great people. Yeah, I mean, 13K for a Tesla with 30K miles. That's crazy. Like you can't get that, bro. Like we go on the Tesla website and go to their used inventory, you're not gonna find that. Model 3, most likely. Yeah, like this one with 90,000 miles is 17,000. But then there's a lot of fees that get added, so it's more like 20, 21. So, yeah. I would say you got a good deal on that. But like I said, if you ever wanted to sell it or anything, that's going to be tough. But ideally, you know, the Tesla lasts forever. Hopefully you never have to sell it. I've seen YouTube videos of Teslas that have literally like 1,000,000 miles on them, and they just had to replace the battery like a couple times. Because I think the battery is like the most expensive fix. But nowadays you could go to like a secondary or a secondhand shop and get it done for a lot cheaper than going through Tesla. Me personally, I've never owned a car less than 10 years old. I've had some pretty nice cars before. But having a nice car is kind of stressful sometimes. I don't really like it. I kind of like driving my shitty Jeep that I don't care about. It's nice. It's no stress. I don't like having the stress of having a nice car. I had a beater, but it left me stranded. Sold some shares, bought something reliable. Let me stack those shares back and then some. Hey, that's fair. That's fair. But yeah. See, that's a totally different situation because you needed your job, or you needed that car for a job. Like for me, you know, I don't really have anywhere to go besides the gym, so like a beater works perfect for me because I'm not going nowhere. But if I had a job, that I had to like drive to, then yeah, for sure, I'd probably go. Well, I wouldn't go buy a nicer car, but if there was like something really wrong with my car or something, I would for sure, because you'd make that money back relatively quick. You know, if you're making like 2-3 grandish a month, you know, you're gonna make that money back relatively quick. And as long as you focus on, you know, paying the car off, if you got a loan, not really a big deal. Even if you bought the car, that's even better. Get you that big red Ford. Get me a Ford. Get me a Ford, boy. Ford and a cowboy hat. You familiar with the Carvana story? Open the chart if interested. What about it? It's fast too, bro. I don't think a chart tells the story. Stock prices go up all the time. It's the dual motor one, has the speed package and self-driving. Yeah, that's dope. I want a Tesla one day. But the only reason I wanted a Tesla was for autopilot. And now that it's like a monthly subscription, I don't know if I'll ever get it. I don't know. I'm also a savage. Don't do much. Eat ramen, chicken, rice, eggs. Just game and work plays. Some Top Golf occasionally. I mean, that's just good health. You know? I think a lot of people would look at that and, you know, think of that as a negative. But to me, like, eating clean is, well, ramen's not really eating clean, but I don't think Top Ramen's very good for you, but you know, eating normal like plain rice, chicken, eggs, you know, just chill stuff. That's great, you know. That's better than eating like fast food and like garbage all the time. And cheaper. Carvana is basically an extend and pretend Ponzi scheme, definitely gonna crash. Are you sure? Pretty sure they made 2.3 billion last year. Is that just like an opinion or is that actual facts? Because I'm pretty sure they made, or I don't think it was 2.3 billion. That might have been a different company, but they made a lot of money last year. So I don't know if that's accurate. They made 1.8 billion dollars last year. So I don't know where you're getting that from. And their earnings have only been growing. They haven't been declining like most companies. So I don't know where you're getting that from. You know, the stock is probably overvalued if you're looking at the financials, but to say it's like a Ponzi scheme, and I don't really agree with that. It's a legitimate business. They have money. They make money. So I don't think I really agree with that. And they're even paying off their debt. Their debt's not going up. So they're actually doing better than they've ever been doing. Sure, in 2020, when the stock was up massive, I think this company was losing a lot. Oh yeah, this is a relatively new IPO. But I don't think that's an accurate statement when you're looking at their financials. They went from losing a fuck ton of money to now being profitable and paying off their debt. So I don't know if that's a very accurate statement. The financials don't really compare with what you're saying. Nah, but it's damn good. Hell yeah. Are you familiar with extend and pretend? No, no. I'm familiar with financial reports though. You can't really. I mean, you can finesse some things on the financial report, but I would say the financial report tells the story, not whatever tinfoil or I don't know if it's tinfoil. I don't even know what you're talking about, but looking at the financial statement, it just looks like a normal business to me. The stock is probably overvalued, but that has nothing to do with anything. The only thing I've heard with Carvana is sometimes people have a hard time getting the title, but I assume it's people that financed it most likely. Grady, I'm not going to argue with you about this. I'm not going to argue with you about this. Financial statement tells all, my friend. And that's that. And if you want to dive in more depth, and if you want to dive in deeper and actually get the real information, read the 10K. But I'm not doing that. But to take a now, I don't know where you got this information from. So if you have a source, and I'll check it out. But if it's just some article that you read, I'm not gonna take an article's. I'm not gonna put weight on an article over in a financial statement. I never would. Do you know when Alibaba will have earnings? Didn't they have earnings like a few weeks ago? I have no clue, actually. Whoops. So no company with good financial statements have ever gone belly up? I don't know. Probably not. Because if you have good finances, that's not going to happen. If you go from having good finances to bad finances, then yeah, sure. That's a completely different thing. Alibaba's, I forget that Alibaba doesn't report. You have to go to the investor relations website because it's Chinese. They don't report to the SEC. So I don't really research foreign companies. Yeah, I don't know when they have earnings. Doesn't say. Their last earnings was September, so October, November, December, January. They should have already had it. June, July, August, September. Oh wait, it's September 30th, so it'd technically be October, so November, December, January. So it should be sometime this month. Probably February like 30th most likely. It says on NASDAQ homepages today, but I really don't know where to look if they had it. It could have been today. Let's look. Well, this website's not working, so I can't look at that. Alibaba. I mean, you can just Google it. Alibaba earnings date. Tomorrow. Maybe. Oh wait, that's 2025. I don't know. I don't like I said, it's hard to research foreign companies, so could be after hours today. But realistically, earnings doesn't really matter. It's lagging data. Accounting schemes and tricks aren't real. Got it. Bro, that's not even what I said. I literally have a book right here. Where is it? Financial shenanigans. I know about this shit, bro. You're not talking to someone who doesn't know what they're talking about. Send your source. Send your source. Don't just say things in the chat. Yeah, I literally... He says he isn't interested in article. Bro, I literally said if you have a verified source, send it. But all you've been doing is typing in the chat. So if you have an actual verified source, then send it. But it seems like you don't. It seems like you're just trying to argue for the sake of arguing. But you're arguing with the wrong person. I no offense, but I know more about this than you. So you're arguing with the wrong person. Your little, whatever article you read isn't relevant, most likely. And if it is, you would send it. You're arguing with the wrong person, my friend. I know a lot about business. I've been doing this shit for a long time. And though I'm newer to the financial analysis, I know a lot about the fucking market and business. And financial analysis is simple. It doesn't take a genius to pull up a 10K and read it, see some numbers. When a company goes from losing billions, hundreds of millions, to making 100 million, and then next year making 400 million, and then the next year making 1.8 billion, it's not failing. If it was failing, the earnings would be going down. Crazy, man. Crazy. So if you have a real legitimate source, send it. Don't just say things in the chat. Like, I'm never gonna just like take your opinion and be like, yeah, you're right. No, you're in the wrong place if you think that's gonna happen. Crazy, bro. Crazy. Oh, well. Just tried to give him something to talk about. You're not giving me anything to talk about. You're just... Okay. Okay. Crazy, bro. Crazy. Oftentimes, the stock will either rise or fall. What are some of your favorite stocks to look at? GameStop. And GameStop only. I'm not trying to be hostile, but if you're going to make it personal, I'm not really going to engage. I've told you like 5 times to send a verified source, and you still haven't done it. So, whatever. What do I like about GameStop? A lot of things. A lot of things. The way you're typing in my chat, Grady, you just want me to like accept your opinion, but I'm not gonna do that. It takes 10 seconds to look up a financial statement. GME has everything most companies don't. I mean, I wouldn't say that. I wouldn't go far as to say that. I just think the stock is fairly valued relative to the company, and it's not really pricing in the future, whereas most companies, businesses that are doing extremely well already have the future priced in. So, you know, it's more that. Like there's there's 50 companies that are way better than GameStop and probably will always be better than GameStop. But if you're looking at it from like a stock valuation perspective, GameStop is one of the only stocks in the market that is fairly valued and isn't, like I said, really pricing in the future. And it's because nobody knows the future. And there's still that like negative stigma on GameStop. Because people don't look at financials. Like, that's crazy, right? Isn't it crazy how that works? If people actually read their financials and followed companies for what they are, they wouldn't have a negative opinion on GameStop. Wild, right? I don't think my link's showing up in the chat. You can't post links in the chat, so you just got to tell me what to Google. Or what, yeah. You can't post links in the chat. I don't really know a lot about them. I just know they went bankrupt in my country. They didn't go bankrupt. They pulled out of your country because your country's unprofitable to do business in. For them, at least. I'm sure there's profitable businesses in your country, but that they didn't go bankrupt. See, so I don't know where you got that from, but that's not a real thing. USA really. Management to balance sheet. Not a lot of companies come close to long-term potential. Check out Heidenberg Research. Carvana. See, what's the article though? Grift for the ages? Is this it? Holy shit. I think I've saw this article when it first came out back in the day. Pretty sure I've seen this article before. Carvana is a 44 billion online car dealer. Well, that's inaccurate unless they're going off market cap. They only have 14 billion in assets, and probably at that time they were sitting at like 11, 12. So, you know, that's only accurate if they're going off market cap, but that's kind of irrelevant. I'll just read these. Carvana is 40. Yep, know that. Despite facing bankruptcy risk in 2022-23, Carvana's stock spiked 284%. Yep, I know about that. Extensive document review, 49 interviews. Carvana's turnaround's a mirage. 49 interviews with industry experts, former Carvana employees, competitors. I mean, maybe, but the financial statement doesn't reflect that. 800 million in loan sales to a suspected undisclosed related party. Underwriting fueled temporary reported income growth. Accounting manipulation tax lacks underwriting and fueled temporarily reported income growth. A lot of insiders cash out billions in stock. I mean, that's fair. Exorbitantly valued. Yep, know that. It's pretty obvious. Carvana's business already faces major headwinds. Used vehicle prices have declined 20% in the past 3 years. No, they haven't. Used vehicle prices have only been going up. That's not accurate at all. We can literally look that up. United States used vehicles. Or I guess just used vehicles, probably. I don't think it's US. Where is it? Vehicles. Where is it? Car. Right here. United States used car prices. I guess they were declining in 2023 to 24, but they've only been going up since then. But the only reason the only reason car prices were declining in 2022 to 24 was because of interest rates. It was harder to get loans. But they're completely ignoring 2020 to 2022 when car prices did nothing but skyrocket. So that's not like, I just don't find that research relevant. I really don't. Their research was here. They didn't see the future. They were just reporting on car prices declining because of economic factors, because of interest rates going up and making it harder to get a loan on a car. Car prices in general have only been going up, so I don't really agree with that. And, you know, even if they did decline 20%, they went up like 100%, so that's nothing. CEO sold $3.6 billion in stock. He stopped selling. Carvana stock plunged 99%. Faced bankruptcy. Yeah, they were losing a lot of money. Of course you're going to sell a bunch of stock when the stock price is up massive and you're losing tons of money. Like, of course. That's just smart. That's just smart. 3 consecutive quarters of modest positive income, despite stress to the used auto market. At least they noted that they've become profitable. See, how can you say all these negative things and then come out and say 3 consecutive quarters of modest positive income? Like, they have been making income. They've been crushing, and they made 1.8 billion last year. So I just don't know if this article is really relevant today. I think this article was written at a time when, sure, maybe it was relevant, but I don't think it's relevant now. There's a lot has changed the past year. Oh wow. Emil Scott Hansen is active in the chat. Welcome, Emil. I appreciate you, bro. Appreciate you being active in the chat, my friend. I appreciate it. I haven't been looking at the chat. Danish stocks like Novo Nordisk, but mostly American AI. Weight loss stuff will be cash cows. Americans love burgers. The bigger, the better. Impact the world in so many different ways, and most people don't really know how big it really will be. It's not in Denmark. I don't feel like people really think it's something too special. That's interesting, because I feel like in America, everyone and their mom thinks AI is special, and I feel like I'm one of the few people that don't necessarily think it's that special. So that's kind of interesting. But in Europe, they put restrictions on everything, so we can't really use AI to its fullest. Potentially a good thing. Potentially a good thing. Not gonna lie. Basically giving everyone a genius personal assistant, powerful tool that can streamline many things. That's fair. Google what extend and pretend is first, then read the article. I'm not reading the article. I'll go through a few more of these headlines, but they're just trying to put a negative twist on something that probably isn't even negative. Like, I can't put any weight on this. I can't. You know, in 5 years when Carvana's financials are shit and the stock price is plummeting, sure, maybe this article will be relevant, but I don't think this article is relevant. I really don't. And you can say I'm just being negative and being a douche, but I read shit like this every day. A lot of the stuff people talk about doesn't really add up when you do your own personal research. But I'll entertain it for a little bit longer. Lending strategy where banks extend the terms of troubled loans to avoid immediate losses, effective delaying recognition of defaults while hoping for market recovery. Are they actually doing that? Because it looked like on their balance sheet they had $5 billion of long-term debt and then they paid some of it down. So is that actually happening? Very debatable. Very debatable. For every $1 net income reported, the company added 139 in market cap. And comparing the business to the stock price, like, that's crazy. The stock price going up has nothing to do with anything. The business is the business. The stock is the stock. How much was the stock up back then when they wrote this? The stock was at all-time highs when they wrote this. So what that tells me is Carvana stock was hot. Someone wrote a hit piece on it to get views and clicks and a reaction, and it obviously worked. That's what that tells me. But I'll read a little bit more, but I'm already kind of over this. I don't find this relevant. I would never invest in Carvana either way. I don't think about Carvana. I don't care about Carvana. So that's also, that's also part of it. I would never invest in a stock that's sitting at a 78 billion market cap while the company is sitting at a 14 billion in assets and 9 billion in liabilities. Like, that's what it comes down to. All of this is pretty irrelevant. A lot of people in the USA lost jobs already because of AI, right? I think I heard it. It ain't sure. Yeah, I think so. I think there's a lot of jobs going away. But there's a lot of companies also investing a lot in AI, so they're not really able to pay employees as well and as many employees as they used to because, they're putting all this money in AI, so there's been a lot of layoffs and stuff like that. They provide financing so that people can buy cars. Hard to say if there's a correlation between job loss and AI. Any business that has employees gives raises. Maybe one person is overpaid for their work. They can be replaced with someone for less. Stories that people aren't actually able to make their payments, but Carvana is just pretending they're in good standing by extending the terms of the loans. I mean, you can't take someone's opinion and, like, say that's accurate. 49 interviews. That's not very many. Who did they interview? Like, there's so many holes in this little article here, and I haven't even read of it. And if that's accurate, you could say that about every bank in the world. Every bank in the world does the exact same thing. So I just don't know how accurate that is. That's all. I can't put any weight on articles. I can't. I just can't. I've read too many. I've seen too much. I can't put any weight on anything like this. The stock was at an all-time high at the time when they wrote this. And sure, you know, the stock's only gone up since they wrote this. But that just tells me the stock had a lot of hype in that moment. And why would you, what other thing would you write an article on besides a stock that is at all-time highs? Of course you're going to bash on it. It's easy to bash on a hype stock that's at all-time highs. Get people to react. It's very easy to do that. Crucial information that will help investors understand the terms of the Allies loan book has become increasingly concentrated, with Carvana loans rising from 5% to 8.4%. Warning that retail auto side, our credit challenges have intensified. That's fair. I'm sure they have. I'm sure they have. Interest rates were going up back then. Completely different economic situation back then as well. Completely different. The economics have changed so much in the past year. Yeah, I don't want to read this. I'm sorry. I really don't. Whether it's relevant or not. Even if it is relevant, I don't want to read it. A lot of research, though. A lot of research. But just because there's a lot of research doesn't mean it's relevant. Things change pretty quick. What I read something about Amazon cutting down on employees because AI is getting so advanced it can do most of the things humans can. I mean, Amazon's been using AI for the past 10 years, though. So, like, yes and no. It's tough to say why they're doing it. There's a lot of opinions out there, but to get the truth, that's tough. It's tough to get the truth. Not trying to come off as an expert, definitely open to learning. I mean, I am too, but I can't sit and read an article that's just I just can't read an article that doesn't back what's happening from the things I research. Like I said, like I was saying earlier, if you didn't look at GameStop's financials and you didn't follow the actual business and see what they were actually doing, you would read articles about GameStop and you would form a terrible opinion about GameStop. It's no different with any other stock. Like, I can't put any weight on an article. I can't. Especially when it doesn't match up with what I see personally. You know, they did more research than me. They spent a lot more time on it. So maybe there is something. Maybe there is something there. But I can't put any weight on that article. I really can't. I just can't. Hate to say it, but how many white-collar jobs are just reading emails and moving communication down the chain? Hard to say. is the mark of an educated mind. To be able to entertain a thought without accepting it. I guess. I just don't think the market's that complicated. I don't think business is that complicated. If a company's posting a $1.8 billion profit, they made $1.8 billion. It's not just made up. Could be, you know, if that's made up, then there's a lot of businesses out there that are complete frauds. But I think time will be the teller of that, not some article. I'll give you a cheap bull trend stock to invest in. Well, if it's cheap, it's probably garbage. So, like, I really want your stock. I'll look it up. Oh, oil? You're talking about oil? We talked about that at the low, so not very interesting. This I'm banning you. I'm banning you. Crazy. Nobody wants your garbage stock. We talked about oil a long time ago. That's crazy. That's crazy, though. Talking about oil at all-time highs. Or not all-time highs, but the highest it's been in a long time. We talked about oil before it even started going up. Oil was a great trade. Is it a great trade now? Probably not. Probably not. Cash is a hard asset to fake, though, in GME's case. Net income. The cash isn't really relevant. The net income's what's relevant. If GameStop was just sitting on cash and still losing hundreds of millions of dollars, it probably wouldn't be that great. There's a lot of companies like that. White collar jobs, a real bubble. We were talking about oil when they were still dinosaurs. Nah, I just remember talking about oil before it started bouncing. Because I forget exactly what it did on the chart. There was also that trend line as well. It was a pretty simple trade. Relatively simple trade. Yeah, you had the little you had the little lower low here. I had the trend line because you had this trend line that was like something like this. I can't remember exactly what it was. It's on my actual chart. But yeah, you've also had multiple bounces on oil at like 56 bucks. It was a relatively simple trade. But it's I think it's funny that someone came in here and promoted an oil trade after it's already up like 20-30%. Like, that's pretty funny. Just goes to show, like, you know, I don't know. Maybe it keeps going up, but when people start talking about things, generally, it's pretty much over. It definitely could keep going up, though. I would never say it couldn't. But it's not a good trade anymore. It's a lot more risky than it was about a month ago. And he's promoting some like business that's like a couple $100 million. It was like $100 million that turned into $500 million. Like, that's not good. It's already up 2x. That's risky to buy now. You should have been buying that at the low. But yeah, final thing on the Carvana thing. 5-10 years from now, if it's actually bankrupt, I think I already said this, but maybe that research is relevant. But from my perspective, off of the little research I've done, I don't find that research relevant. You can't sit and bash on a company that's making profit and say it's going to be bankrupt or crash. Or I mean, it can crash, You're sitting at a 70 billion market cap with like not even $1 billion in stockholder equity. So sure, the stock could crash, but to say Carvana's not going to be here in the next 5-10 years, I think that's I don't know if that's relevant. I don't think that's relevant. Maybe if they go back to losing billions of dollars, hundreds of millions of dollars, sure. Sure. But they had one of their biggest years last year. So like I just don't see it. And they could literally do like an ATM right now and raise so much money if they really wanted. They're in such a positive position. If, that's something they want to do. They probably won't because they're just going to get massive bonuses from having the stock price up. So it's probably not something they want to do. But they could. I think they're hiding losses. Check out vehicle repo rate trend line. We'll see. We'll see in a few years. I'm really not interested at this point. I've read enough. Maybe they are hiding losses. Oh well. They still paid off debt. They went from having 5.2 billion in debt to only having 4.6. So they were still paying off debt. They're still doing, on the financial statement, they're still doing everything positive. Maybe it is all fake, but if that's the case, I don't even know why we're talking about it, because it's a complete irrelevant investment. Like, it's not even a relevant topic. I streamed about it for fun for the earnings call, but if it truly is just a fraud, it's not even relevant. Like, it's a waste of breath to even talk about, waste of mental space to research about. I want to research about businesses that are actually good and that can actually produce. Speaking of that, should we look at Under Armour? It's up again. It hit $8. It hit $8. Son of a bitch. Son of a bitch. See, these are the things you should be researching. What a killer. Oh, I need to stop looking at that. How's the Bark? Oh, I think Bark had a really bad year. I think it's in the shitter. Yeah. It's in the shitter, I'm pretty sure. Well, let's see, actually. Bounced pretty big off 50 cents, but I from what I remember, I think it had a bad financial report or something like that. I can't really remember. They haven't even posted their 10K yet. That's the next earnings report. Yeah, they're basically on par to do what they did last year, so that's not great. The point of this investment was hopefully they turned around, but it didn't, so, you know. Good thing I sold it when I did, I guess. They're basically just on track to do what they did last year. I mean, maybe they'll do a little bit better. Maybe they'll lose a few million less, but they're, it's not great. It's not great. And they're just they lost yeah, it's not good. It's not good. It's not good. You think someone would acquire it? I mean, I'm sure someone will eventually. For sure. But will it go bankrupt before that? We'll see. We'll see. Could go bankrupt before that. If they don't turn around in the next like 2 or 3 years, that's bankrupt for sure. Wait for it to get cheaper first. I wouldn't buy it. Like I said, the play was that they turn around and start becoming profitable, and they're not on course for that. I would never buy that at this point. It was interesting at the time when we talked about it, but it's only been I mean, it hasn't been declining, but it's not producing at the rate it needs to. You know, who knows? Maybe 2027. Maybe this is their year. You know, maybe they make profit this year. That's possible, but it doesn't look like it. Doesn't look like it. Looks like it's basically just staying the same. I wonder how Opendoor earnings will be. I remember there was a lot of people hyped on this stock for a while. Obviously, it's down quite a bit from when people were hyped on it. But there's got to be a group still holding the bag, right? I'm sure there is. What did they do last quarter? Yeah. Oh, 800. Oh, well, they actually increased stockholder equity, so that's not bad. What is their market cap at, though? Isn't their market cap, like, really high? 4.5 billion? That's a joke. That's a joke. Whatever happened with that activist influencer for this stock? Who knows? I'm sure they're still holding. Maybe. I remember there used to be a lot of people that would come in here and talk shit about that, or not talk shit about that stock, but they'd be like, Opendoor is a way better investment than GameStop. Like, are you sure? You sure? You sure about that, bro? Speaking of GameStop, is there any Reddit things? I don't know if this is kind of funny. There's a hidden message in latest Ryan Cohen tweet. Someone just redacted the whole thing except the shorts are fucked. That's ridiculous. Reddit is so dumb. Oh shit, that's funny. Mississippi man finds life-changing baseball card at local GameStop. This guy's promoting his game on Superstonk and it's not getting deleted. That's interesting. Oh yeah, I guess on Whale Wisdom you can look at the GameStop warrants. I didn't know this until today, literally. So you got a lot of warrant positions that got added last quarter. All these are brand new. So State of Wisconsin Investment Board added 64,000 warrants. Susquehanna added 52,000. Jones Financial added 155,000. Obviously, there's a lot of small ones, but Sageview Advisory 40,000. LMR Partners 32,000 or almost 33,000. Toronto Dominion 147,000. HBK Investment bought calls on the warrant and puts. They bought calls and puts on the warrants. That's kind of notable. 123,000 puts. That's pretty crazy, actually, because I think that's the exposure of like, what is that? I think that's 10 million. I think that's the exposure of 10 million potentially. Basically, right? Yeah, I think so. I think that's the exposure of like 10 million warrants. D Shaw bought 365. White Box Advisor bought 286,000. A lot of buys. Millennium Management bought 156,000 calls. So that's, another 15 million exposure. That's crazy, bro. That's crazy. So there's a lot here. Barclays bought 83,000 calls. .72 Asset Management bought 445,000 warrants. Morgan Stanley bought 261,000 warrants. Walleye Trading bought 127,000 calls and 9,000 puts. Title Investment 78,000 warrants. Healthcare of Ontario Pension Plan 58,000 warrants. State Board of Administration of Florida Retirement System 33,000 warrants. Wow, Jane Street bought 362,000 of them. Bank of Montreal bought 63,000. JP Morgan Chase, I think this is a bond. PRN, I'm pretty sure that's a bond. So they bought like a bond for the warrants, or maybe they just bought bonds. Norges Bank, 289,000. Then the rest of them are like right when they came out, it looks like. Oh, wait. Never mind. These are all from, okay. UBS bought 170,000. And that's basically, there's a lot of small ones, of course. But yeah, that's pretty interesting, I would say. Sounds like they're positioned for a rise then fall move. I don't know. I think they just find value in the warrants and the warrants are, well, at the time when the warrants were trading at like $3, they were better value than the options. That's when a lot of those were purchased, most likely. What is this investor relation website? Where's the... Might be on YouTube. Might not be as a poppin' of a stream as I think it's gonna be. Kind of sucks when they do their earnings calls on YouTube. Hey, look, it's me. I guess we'll have to wait until... Why isn't their YouTube channel popping up? Oh, it's right here. They don't even have it scheduled. Okay, I guess we'll I don't know. We'll see what goes on there. Alrighty. Is there anything else? Started the stream too early. Oh. What does Opendoor do exactly? I think it's like it's just a real estate brokerage, but they have they can do like the loans from the app or something like that. Similar to Carvana, but with real estate, I guess. I think Muma knows quite a bit about Opendoor. I don't actually know much about it. I don't research companies I'm not interested in. That's I think that should be I think that should be apparent after the Carvana conversation. I don't find companies that I'm interested in, or I don't find companies that I'm not interested in. I don't research them. I just don't care. It's a waste of time for me. Larry's tweeting about AI. I don't have Twitter. I mean, I reactivated it yesterday for a second, but I'm not reactivating it. No, sir. No Twitter for me. YouTube only. YouTube only. I mean, when the earnings comes out, we'll know a little bit more about Opendoor. But I've never researched it. I'll research it today a little bit. Best buddy Mike Burry has a YouTube. Does he? Does he really? Does he actually post? I don't know that he does. I don't see that. I don't think that's a real thing. Unless he promotes it in Substack or something. I think he only uses Substack. Mike Burry 2077. I don't think that's real. Could be, but I don't think that's real. Buffett on meeting Lorimer Davidson. How do you know this is Mike Burry, though? Or Michael Burry, I guess. He tweeted it? I feel that. Are you sure? I don't think I ever saw that. Either way, there's nothing on here. We've probably seen that Warren Buffett video. We watched the Buffett archives. The Buffett archives. Tweeted yesterday about wanting to live to 106. Yeah, I don't look at Twitter, so I don't know. But there's nothing on there anyway. He does have good taste in music. I will admit that. Not very good taste in stock analysis. Just kidding. He's pretty good at stock analysis. Surprised nobody posted about it. Usually a lot of people post about that type of stuff on the Reddits. Yeah, nobody's even posted about that. Oh wait, we gotta go new. There we go. Yeah, I don't see that, but I'm not reactivating Twitter to look either. I enjoy how aggressive he is with idiots. I heard he went on a multi-hour long reply session saying read for yourself. He probably did. Shit's funny. It's funny. Oh. Oh yeah, let's look at we can look at some funds, I guess. I haven't done that in a while. I think I need to remove Scion from the list though. Yeah, we gotta remove that one. What is going on? My computer just froze. Is the stream still live? My shit just froze, son. Are we still live? Should be still live, but my shit froze, man. What is going on here? Why did it freeze? Yes, okay, good. My computer's having a hard time loading these websites for some reason. There we go. You gotta get rid of the Scion one. It's not relevant anymore. DM him you're bullish on planters, see what happens. I'm good. I don't want to DM Michael Burry. Can't anyway. I don't have Twitter, whatever it's called. Twitter Premium, X Premium, whatever it's called. Couldn't DM him anyway. And I wouldn't want to either way. What's up, Hugh G? How you doing, bro? For my Walmart PC? My PC's nice. It's just old. So whatever this is, Tally and Company. This is Christopher Tally. So some brand new consumer discretion positions. Industrials, materials. Yeah, that makes sense. You could go through this and research a lot of companies this way. I'm just taking a little glimpse. Damn. I mean, a lot of this is pretty reflective to the market as a whole. It's kind of interesting. Damn. Massive increase on UAA position. I haven't looked at these in a long time, so I don't really know what to say about it. I also don't know what a lot of these tickers are. That's why this is honestly, like, the only reason this is relevant is to find tickers to research. Other than that, you know, I don't think I would like base a play because Baupost Group added a position on Arrow, whatever the hell that is. You know, this is more of a tool to like find companies to research more than anything. Just had a Costco hot dog. Nice. I haven't had a Costco hot dog in a long time. Barker already has two offers at 90 cents and the other at 110. Oh, that's probably why you had that spike on the stock. Could have already got bought out, maybe. Either way, not much gain there. Never had a Costco dog. I don't know. It's a hot dog. I don't know. I don't think hot dogs are that good personally. $1.50, get a big hot dog, soda pop. Mediocre boiled hot dog, but if you're trying to survive on the low, it's a lifesaver. There you go, there you go. Just stack that bitch with some relish, bro. You won't even know. You won't even know it's a $1.50 hot dog. You just stack the relish on there. $9 massive pizza they got. It's a pretty good deal too. Their pizza's actually pretty decent. It's really greasy though. Shook down all the sample stands. Hell yeah. When I was younger, we would make our own free sample stand into the store and try out the snacks, then leave. Really only eating hot dogs when camping. Yeah, that's the best way to do it. Ruben, what's up, Ruben? How you doing, bro? How you doing, Ruben? Everyone's so used to me starting the stream late. People are coming in late. I started the stream pretty early. We've already almost been streaming for 2 hours. Good lord. I need to not start the stream this early. Or that early. You just run out of things to talk about. I had a Five Guys hot dog that was pretty good. Yeah, the Five Guys patty melts gas. The grilled cheeseburger or whatever. That shit's good. Yuchi knows how to live. You want a good hot dog? Go to Portillo's. What the hell's Portillo's? I don't think I have that where I live. Oh, there is one. Wait. Portillo's Enterprises. That doesn't sound like a restaurant. I don't think that's a restaurant. I think that's a business. I don't think that's a restaurant. Yeah, I don't think I have that where I live. You know, me working, I chime in when I can, even when I can't sometimes. I listen when I can, always enjoy. I appreciate you, Ruben. I appreciate you, bro. I wanna ask this to the people who are here all the time. What do you guys want to see from this stream? Like, is there anything you wish I would talk about more? Or I know some people want to see gaming, but that's a very small group of people. So besides gaming, what do you guys want to see from this stream? Like, is there anything that I don't talk about ever that maybe you would want me to talk about? I don't know. If you have any suggestions, let me know. Hot dog coverage. Should I do food reviews, bro? Beard meets food. I could do some professional eating on stream. Some beard meets food, bro. There's been a real lack of hot dog news. Movie reviews. I just don't watch movies, unfortunately. That would be a good one, but I don't really watch movies. Then push a shit coin. I could do that. Start watching movies. Easy content. I just don't like movies that much. That's the only thing. Not a huge movie buff. So many movies you could see for the first time. Yeah, but do I want to see them? That's the real question. Do I want to see them? Is this Carl Icahn? Yeah, they're always adding to IEP. How's that been doing, by the way? I haven't looked that up in a while. They're always adding to that. It's really not up that much. Oh yeah, I gotta watch that Penguins video. We gotta do that. Penguins made a video about AMC, and I think that would be a funny stream clip. I know you were talking about this the other day, Muma. So this is Berkshire's Whale Wisdom page. It finally got updated. They added 8 million shares to Chevron, I think that is. Some brand new position on NYT, whatever that is. Added more to Domino's, CB, whatever that is, some bank thing. But they sold 50 million shares of Bank of America, which is only like 9% of their position. Apple, they sold 10 million shares, which is like 4%. Amazon, they sold 7.7 million shares, which is like almost 80% of their portfolio, or 80% of their position. Sold AON, sold STZ, sold Pool, Leela, Bat RK. Sold 50% of Bat RK, whatever that is. The other ones, they only sold like 10%, 3% of STZ. So not too much. They don't really do too much. Test glitzy. Weird, like 3 of messages got blocked. Oh, that's whack. Maybe it's because you're talking about hot dogs. Like, is he really talking about hot dogs, or what is he actually talking about? I was dropping some wild hot dog knowledge, but YouTube doesn't want me to share my secrets. Well, I think Moose can approve the messages, I think, if he's here. I just don't think that he ever does. I think I told him not to approve messages that get blocked, but if he wants to, he could do it. Maybe. I'm not sure. I haven't seen the chat from the moderator perspective in a long time. New York City cell towers, Stifling Kong. They dropped Amazon. They sold 80% of the position, so they still have it. Talk more about high quality stuff from the Twitter on the internet. I am not reactivating Twitter. I'm sorry. I hate Twitter, bro. Unfortunately, I'm not doing that. Jeff Jolly. What's up, Jeff Jolly? Hot Dog Gate. Alright, let's watch the... I don't want to go through all these funds. If you're not researching the companies, I don't think it's really too relevant, but yeah, let's watch this Penguins video. Making fun of AMC.
At Handinstone, member...
At Handinstone? All right. I don't really know how this stream clip's gonna go, but we'll see. I also don't know. There's a lot of things I don't know about this, but we'll see. All right. So AMC Theaters has begun screening AI-generated short films. I don't know what this is really about. Penguins just dropped this video, Moist Critical, whatever you call him. And yeah, I guess we'll see what he has to say about AMC, which AMC is a terrible company, so there's probably a lot of negative things to say.
Ah! What note was that? These pipes can hit the most rare of musical notes. And speaking of music, I got some music for your ears right now. I got a wonderful melody. You ever heard of AI? Because man, do we have some great news on that front. AMC's getting experimental. They're putting their grubby little paws into the AI short films cookie jar, and they are going to be screening AI short films at select theaters before trailers, with potential plans to expand nationwide. Which is exactly what everyone's been begging for. Anyone who's been to the cinema over the last 2 years has probably heard this time and time again. Man, I wish I could watch some AI-generated shorts before watching my movie.
Oh, okay, so it's like, it's shows before the movie. Okay, I see. That sounds terrible. I guess AMC's running out of ideas, I guess. They gotta drop one last little bombshell in hopes that their stock price goes up so they can dilute their shareholders again and try to survive for like another year or two. AMC is so trash, bro. Like, I don't know why people invest in that, and this video is going to get quite a bit of views just because there's so many AMC investors out there, but sorry, I mean, this is a message for you guys. AMC's garbage. It's going to be bankrupt in 5 to 10 years, so just, give up.
And finally, they're delivering. Better late than never, I always say. Now, if I may be so bold, and far be it from me to question the galaxy brain smarties over there at the old AMC think tank, but what the fuck are you smoking? Like, this has got to be an actual, mythical crack pipe that they're passing around over there to think that this is a good idea. If you really wanted to ham fist shorts into the cinema experience before a movie plays, why would you take the plunge with AI shorts to begin with? Something that is universally hated. The only people that like AI animated shorts are like actual single-digit smooth-brain worms that clap like seals at anything that makes noise. Like, this is so fucking stupid. If you're really hell-bent on bringing shorts into the theater before the movie plays, why not just play actual shorts created by real people and real talent? Like, it's not like...
Because, Charles, that costs money. AMC doesn't have any money, so they gotta rely on AI filth.
Shorts are a new thing. These have existed for as long as cameras have. So this isn't some brand new, unheard of thing only made possible thanks to the power of AI. They could have done this whenever they wanted to in the past. And they did dip their toes in occasionally with shorts that play before movies. But I just don't understand why now they want to make this big push for it. My speculation is they're probably getting paid oodles of clams for it, and every single industry is trying desperately to suckle from the titty of AI and anything even AI adjacent. That's my speculation. But I'd like to take this a step further and say that I think the idea of putting even more bloat before your movie plays is terrible. I feel like the people at AMC don't actually watch movies. They don't actually go to the theater and watch movies. I have timed every single experience I have had at the cinema for the last 2 years. So when I sit down, I time from the moment the trailers start to the moment the movie I paid for starts. And the average wait, the average duration of trailers is 21 minutes, but it sometimes gets as high as 30 minutes. So you can wait up to 30 minutes after the posted time for your movie to finally see the movie. It turns what should be only like, 2.5 hour experience into an all-day fucking affair because you're just held hostage watching shit that you don't really care about seeing. And now they want to add even more to that. That blows my mind. That is so tone deaf and so out of touch. Now, to give you a little more information here, it looks like the AI short that's going to be playing at select theaters is called Thanksgiving Day, an intergalactic tale about a bear and a platypus, and it just won Frame Forward A.
Why would they why would they make a short film about AI? Or god damn it, I fucked that up. I'm gonna have to edit that out. Why would they make a short film and play it about Thanksgiving Day? It's February. Thanksgiving was like 4 months ago. What are they doing?
AI Animated Film Festival, very prestigious. That is coveted. People go their whole lives striving to achieve that accomplishment, being the best AI animated short at Frame Forward. And one of the prizes for winning here is a 2-week national theatrical run for it. And looking at what the experts have to say, this one is a must-watch. This short might be better than the movie that I'm paying tickets for. Thanksgiving Day is a masterclass in original storytelling, a wildly inventive journey that balances sharp satire with unexpected emotional payoff, proving that bold imagination with the tools of AI complement the future of animated filmmaking. That's according to Joel Rudman, president and head of studio for Moose. And then, of course, jurist Neil Paris from Google's 100 Zeros, whatever the fuck that is, what the hell? I feel like I just read an Xbox Live gamertag. Said, Thanksgiving Day is an imaginative... Jesus, it made me dyslexic. Thanksgiving Day is an imaginative and funny short showcasing AI's ability to unlock imagination for animated storytelling. Thank God, it's fully unlocked now. Before, it was forbidden. You couldn't tell stories without AI. But thankfully, those are prehistoric times now. That's ancient. Obsolete. Now, I decided to take a peek at Frame Forward's little trailer here, and I got to be blessed with a little bit of footage of Thanksgiving Day, and wow, I gotta tell you, they're underselling how good it looks.
The future of filmmaking is unfolding now. Welcome to the Frame Forward AI.
No way, bro. There's no way people actually think AI is good. Like, when it comes to content. Like, there is no good AI content out there. Zero. Like, the only people who like AI content are, like, TikTok scrollers, I swear.
AI film contest.
Hey, I'm Michaela Schifrin, and I'm proud to
An ad? Ruining my video with an ad?
partner with P&G for the
How
Winter
dare you.
Olympics. One of the things I love the most about working with P&G.
Wow, dude, that looks so good, chat. Whew. That looks amazing, chat. Look at that high quality AI content. Wow, AMC really outdid themselves this time. Whew! Adam Aaron, give me some more, bro. Give me some more of this platypus thing.
That's the future right there that you're staring down the pipe of, and the future is looking bright. I always find it fucking adorable that they say directed by or credited as a director for typing in the sentences to the AI generation tools. That is super cute. That's me calling myself a chef every time I make myself a bowl of cereal. Anyway though, I'll stop yapping on the AMC stuff for now because there's one other thing I want to talk about, and it's something Matt sent me. Apparently there is a big video going around about AI camera tools that are being used at like a coffee shop to track the efficiency of...
Oh, I guess that's the end of the AMC part of this video, but man, AMC is going downhill, bro. I can't believe how large of an investor base AMC has, because that has to be the most garbage company I've ever seen in my life, bro. Crazy, man. That should be an okay stream clip, right? I don't know. We'll see. We'll see, I guess. All the AMC investors are gonna be like, AMC to the moon! Why are we talking about hot dogs? Big Burger Corporation has entered the chat. BBC. AMC's ahead of the time. They released exclusive I own AMC NFTs for shareholders in 22. Now they're gonna be a revolutionary AI company. Don't sleep on AMC. Oh yeah, bro, it's revolutionary. Losing hundreds of millions of dollars a year. This AI short film before the movie you actually want to see is gonna change everything, bro. It's the game-changing business strategy AMC's been looking for. They do that so you buy the overpriced food and snacks. I really like going to movie theaters. I wish AMC had competent management. Well, at least there's Cinemark. At least there's Cinemark. At least there's a good business out there. If I had to watch AI for 30 minutes or go buy a hot dog for $20, I'd buy the hot dog. That's a good point. That's a good point. Get that Swiffer ad back up instead. Oh man. I need to go to the bathroom. I'll be right back. I just want to know if the platypus eventually finds love. I guess I'll have to go back next week. Oh, that's hilarious. That's hilarious. I think that's crazy, bro. I think that's actually insane. I just... Ugh. Being an AMC investor. That's gotta be like the most disgusting thing ever. Like, what is I don't know. What does the investor base like even see? Are they just like praying to Adam Aaron? The stock's gonna go up to $1,000 again. It's gonna happen. Like it's probably never gonna happen again. 2020, 2021 was unprecedented time. It's never gonna happen again. You'll never see that ever again. I don't think. I just don't see it. Last investor of that company I came across, they convinced Ryan Cohen was gonna buy it. That's crazy, bro. Like, how do you even form that opinion? Like, straight up. What like brain rot nonsense are you consuming to form that opinion? Scrolling too much Reddit or something. It's crazy. Absolutely insane. What's worse, those guys are the bath people? At least Bed Bath and, well, I don't know, man. I don't know why I don't know why people are so, people just have like bad views on the market and like business. Like people aren't educated. That's like the biggest problem. I don't think it has anything to do with which one's worse. It's just people are uneducated in this space. And it leads to stuff like that. So I think just being uneducated in business or stocks, I guess in this case, is just negative overall. If there was better education and people weren't so like easily fooled into believing things that aren't real, you know, I think people would be more successful. They'd have a lot easier of a time, a lot less stress. Like even some of the YouTube comments on the stream clips I've posted recently, like there was one, I've deleted a couple, but like this guy, this is all in the dark pool, so why is the stock not going up rapidly? If institutions are buying shares, that's to cover shorts this time. Like what? What are you talking about? That has nothing to do with anything. And someone sold them those stocks, most likely. So it's like, that's probably why the stock price isn't going up. Because for every buyer, there's a seller. And if someone's buying multi-million position on stock, or, you know, a multi-million share, or a couple million share position, it's because a bunch of people sold it to them. You know, it's probably not one seller selling them 2 million shares. It's probably a combination of a lot of people, you know, selling, and then that institution buying the position. So like, I don't know. I don't know. Just some of the ideas that are out there, they just don't make any sense, really. Like, what does dark pools have to do with anything? Realistically. Literally nothing. Like, literally nothing. 100% a cult. Never thought I'd look at such a genius for selling my bags. Mega loss for 40 cents. I just don't get why people invest in businesses that aren't profitable. Like it's almost like you're basically just investing in crypto. Like you're just hoping the price on the screen goes up. Like you're not investing for any other reason other than that. Like that'd be a rough investment. Like GameStop's different because I don't even give a fuck about the price on the screen when it comes to GameStop. You know, you're investing in the future of the business. The price on the screen doesn't really mean anything. Like I could not imagine being invested in something just like praying that the price on the screen goes up. Like that's ridiculous. But whatever, you know. Those people are screwed. They're never going to change their minds. They're never going to like seek out better education. Those people are screwed. Maybe their stock price goes up. I wouldn't count on it, but maybe. I think most people are done with AMC. Their subreddit's dead. There's like 5 people that post there. Couple posts a day tops. AMC on YouTube gets a lot of views though. Like one of the videos I posted, you know, maybe it's bots. Could be bots. But it was this one. Not this one. Which one is it? Oh, only 2%. I thought there was another one where it was like 20%. Yeah. Never mind. Never mind. I guess I just read it wrong. It's just crazy what people get themselves into when it comes to investing. I don't know. I've seen too much, man. I could never invest in a price on a screen. How will AMC turn around? They're not going to. It's going to be bankrupt in 5 years or less. They're not going to turn around. They don't care to turn it around. It's losing more now than it's ever lost, I think. I don't follow it either, but lost 973 million in 22, 400 million in 23, 352 million in 24. It's already on pace to lose even more this year. Like, it's not. Yeah, it's on pace to lose another 400 million basically. So it's not going to turn around. Thinking isn't their thing. I know, that's sad. That's sad, bro. They should have cut their theater rooms in half and turned them into storefronts or apartments years ago. It would have been interesting. I don't think they own their storefronts. Pretty sure they're just leasing out the space. So you can't even do that. I don't think. They should have just cut costs and I don't know. It's a trash business anyway. Like who the fuck who goes to a movie anymore? I can't even tell you the last time I went into a movie theater. Yeah, I don't watch movies, so maybe I'm a bad sample. But I don't know anyone who goes to movies. That's a lie. I actually do know someone who does go to movies. Like every couple weeks or something. So I guess there's demand there, but it just doesn't seem profitable. Like the real estate's so expensive. I just don't see how it could be profitable in any shape or form. Netflix buys AMC. It's gonna go bankrupt. That's what's gonna happen. AMC doesn't have the will to turn it around. Ryan Cohen's big tweet seems applicable here. Oh yeah, definitely. Yeah, for sure. They're just churning it out until it goes bankrupt, getting their bonuses, their stock compensation, whatever it may be. They're just riding the wave until it's done. But AMC could become profitable. Like, Cinemark's profitable. Cinemark does well. They just posted a brand new 10K. Let's see how they did last year. I bet Cinemark crushed last year. They didn't crush. They actually didn't do that. Wait, that's not earnings. Where's net income on this? Yeah, they didn't crush, but they made profit. But they're kind of from 2024, their profits are cut in half. So I just don't think that's a good business. I don't think movie theaters are a good business. You know, they had their time. Selling stuff will always be relevant. That's that's probably one of the most major differences between if you're talking about meme stocks and you're putting GameStop in the meme stock category. Selling products is never going to not be profitable. Buying something for cheap and selling it for more is always going to be profitable, no matter what. Once the Sphere Dome one becomes more affordable, will they all be like that? They're supposed to build another one? I don't think they own the Sphere, do they? I thought one of the casinos owned the Sphere. I don't know. I don't know anything about that, but I thought one of the casinos owned the Sphere. Part of it's just downstream of the economics of making movies. Matt Damon had a viral clip talking about how streaming stripped away the profitability of traditional VHS DVD sales. Yeah, for sure. For sure. Cinemark's the one with the nice chairs. EMC doesn't own it, just mentioning. Oh, okay. Yeah, I was gonna say I don't think they own it. Oh. I'm freaking cooked, man. Still got 50 minutes, still earnings. See if I can pull this up yet. There it is. Sucks that it's on YouTube though. That means the stream's not gonna be as big. I don't think. Should I do another acting thing? No! My calls! My calls! AI might make movie production cheaper, and movies as an art form might improve, forming somewhat of a tailwind for movie theaters. Still a lot more work to make the experience better. I don't see how AI could make movies better, though. Like, AI doesn't make anything better as far as content goes. So I don't know. I don't see that. If they start transitioning into AI, that seems like a negative. Nobody wants to watch AI. Well, nobody with a like I said, people who scroll TikTok, you know, they watch AI because it's kind of unavoidable. But nobody's gonna sit and watch AI. I don't think. Maybe, you know, maybe I'm wrong. Maybe there's more demand for AI content than I think, but I just don't see it, man. There's no substance. It's just garbage. Like, AI is complete garbage when it comes to making content. It's so bad. Rocket League Esports, what's going on there?
Protect your dreams.
An ad? Nice. What's going on in the Rocket League Esports world? Day 1, group stage. Who's playing? Twisted Minds. I don't know these
puts a
teams.
laser past Vatira.
That was a much-needed shot. 22
Oh, it's Monkey
seconds
Moon.
to go. It
Monkey
does come
Moon's
down
one
to
of the
this
top
kickoff.
players in the
They need
game.
to have that field possession early.
And they will have it. It goes right to TRK, who was there so early.
Oh my god, that was hilarious.
Right under to tie the game.
He's a magician. You have to watch him because he's got the bag full of tricks.
He faked it. He faked the reset. That was dirty.
TRK. Tie game. Twisted Minds will not go away. And they've got this ball going the right way. Juicy does all he can to avoid the oncoming surge. Final countdown. Overtime is not a guarantee. That's popped away. Monkey Moon got bumped out. Now Vatira. Monkey Moon's going to go after him.
Oh, is that a double tap
for
right
the
there?
win, and
Oh.
TRK will guide it down gently. We go to overtime.
They got the kickoff last time. Can they do it again? Watch Carmi Court.
They
This
have to
ball
win
goes
or
to the
they're about
tier.
to
He's going
lose.
off the
I think it's
ceiling
best of
here.
3.
But he's going to lose a lot of boost. Look, that's a heavy touch. Gets away from him. Here comes Monkey Moon. Juicy, not a lot of boost. Bringing in midfield. But
Oh.
Juicy, even with low boost, great cut. And a great clearance for Carmi Corp to bring this ball back downfield.
Oh, no.
Good touch from Monkey Moon. He's starting to warm up here.
That'll just be left by Novo, and TRK will clear it away. Boy, Twisted Mind did look dead in the water for a little while.
Gotta go for the
And then
dunk.
all of a sudden,
Oh,
they
man.
just turned this game on its
Oh
head. Well, they
man,
turned the
he's about to
entire
do it.
first
Oh
minute.
dude, I thought he was getting the
This ball
double
brought
reset
down,
there.
but
That
Upton
would
will
have
have
been
to chase
dirty.
it down to the side. He's got Monkey Moon up on the ceiling to meet him. High bounce for Vatira. Off the backboard, spiked away.
I like though TRK didn't use a lot of boost to go up. This time he's out the play though. Monkey Moon must get a good touch here. This is awkward. TRK diving for a heavy touch. Back to Vatira. But a clear downfield.
good
TRK's
clear.
up. Leaves it
Except it's
though,
right
and
there for a
Atto
toe.
will try to go up the ladder. This is dangerous if he can get it through. He can. Back
Oh.
to him, but he can't put it on target.
That was so close.
Oh, and narrowly too slow. It's only Juicy at the back. Otto scrambling to get there.
Oh.
It is off the back.
Oh, he hit it! He hit it! They just won. Oh, that was nasty. That was so clutch, bro. He even hit it off the bump, bro. Dirty. Dirty.
Unbelievable.
This is a group of death. It can't be killed.
Oh no, they're tied up now. Okay.
Oh my God.
That is absolutely insane.
That was a good play at the end there. I can't believe he hit that double tap off the bump. That was nuts. That was very impressive. They jumping on AI train because no one wants to be the last in the AI race or be quote left behind or the first. To capitalize on it, even if it means losing in the process. I couldn't tell you why they're doing it. It doesn't seem like a good idea. Just maybe trying to do anything to stay relevant, trying to do anything to make the stock price go up so they can dilute again. Who knows, man? Who knows? I can never do moves like that. That's crazy. Yeah, bro, the pros are insane. I've actually been learning the resets. I'm getting okay at them, but
Catalina
tough.
Crunch cereal.
Resets are hard, man. There's some beasts at this game, though. So many people are good at Rocket League now. It's like, it's crazy, man. It's definitely a different game from when I first started playing. And even when I quit playing, it's changed so much. Yeah, basically everyone who plays Rocket League's on controller. There's a few, like, pro keyboard mouse players, but it's pretty rare.
And again, that late comeback, now Karma Corp are on the brink of a reverse sweep. We thought the series was in the bag for them, but that goes to show you how you can't count out Twisted Minds just yet. Now Karma Corp really have to stop the momentum. I mean, they could have put a timeout. They said they didn't need one, but Tira sends it downfield, follows it up, but it's blocked out by Nobo.
Nacho got there. Juicy will park the bus. Just try and pop one up, keep the play alive, but Nobo
That was a dope little pass to himself off the backboard.
To burn a lot of boost if he wants to get into the play.
Oh my
He
god.
won't get away from there, but boy, he's sure giving it up.
His own goal.
And Juicy cleans it up.
Juicy cleans it up. Monkey Moon
His
really
own
awkward
goal.
here, though. But Tiro, what a great follow-up on a touch. And Juicy just had it right off of Monkey Moon's card.
Unfortunate.
Frustrating, but they start off game 5 behind.
So Carmine scores first again.
Kickoff goal?
Will they get another?
Yep.
They win!
Oh, dude, they're getting
Tira!
crushed. Oh, they're getting crushed. That was a nice
Ties
kickoff.
rise for the all-time record, 271 goals for the career and counting.
Atto with a beautiful bump there on Monkey Moon as well. He was the only one who could stop that follow-up shot. Kickoff not going in favor of Twisted Minds. We've seen them, though, go on some runs here this series. They may need to do it again.
Up.
Damn,
Elbow just bring it
they
over
were
to
so
the side,
close to
try get
scoring
the
right there.
K-Corp defense to burn a lot of boost, but Tira got left way downfield.
Wow.
Nothing in the tank. That pass
That was
down to
almost a
TRK.
sick
Why
pass
not
play.
beat the hot hand? Doesn't work this time.
Oh,
And this
they're getting
goes
scored
back
on
the other
again.
way. And
GG's.
will score his 8th
I don't
of
think
the
they're coming
series,
back
and
now.
they call
They're
him
throwing,
Vatico
man.
for a
They're
reason.
throwing.
Nobody's done it more times than Vatira.
Yeah, you see the idea
They're
there
throwing.
was to be a pass to Monkey Moon. Either the pass was off, Monkey Moon was off, somebody was off there, and unfortunately it leads to an open look. Vatira's gonna sink that every single time. Now, again, this game is starting off similar to the others, with Karma Corp in a very dominant position early.
Do they have yet another life?
That was an
to live
impressive
here?
bump attempt.
TRK can't bring this central. Monkey Moon's out of boost, living off pads. And he watches this go over his head. Juicy managed to grab a full tank on his way downfield. Everything coming up for Carmine Corp right now. Matira
These guys are
looking for
nuts,
somebody
bro.
to bump. There was nobody there. As Twisted Minds, they're playing well out from their own net, and they kind of have to because they feel like they need to chase this now with just under 3 minutes down 3.
Yeah, they've got to make something happen. They put themselves in a terrible position for the rest of this game 5. So even with so much time to go, getting 3 here on KC is such a monumental task. They know that they have a strong lead. They know they have the pressure, and it's a team that can run down the clock.
There's just so
Well,
much
to
pressure.
stay onto this.
The blue
Beat
team is
Matira.
just
TRK
pressuring,
running
bro.
forward to steal the boost. They're trying to starve out Carmine,
Monkey
but
Moon's
that goes
throwing.
nowhere near the net, and that should just about end the attack. Oh, that's a huge missed opportunity.
Oh, good touch there from Addo. Send it off to the side again. Another great touch. You back to Addo, and Addo's going to take it from one side of the
Yeah,
field
that's
to
a
the
GG.
other.
That's a GG if I've ever seen one. See, as soon as I started playing gaming, bro, everyone left. Like, nobody likes gaming, bro. Nobody likes gaming on this stream. It's kind of sad, because gaming's dope. Especially Rocket League. Rocket League's such an impressive game if you've actually played it before. Toy Story 5's coming out. June 19th, huh? Toy Story 5. All the real gamers in the world sleeping or about to get off work right now. Yeah, gamer schedules are at nighttime, huh? They got those nighttime schedules. I guess I should probably have Opendoor chart open, huh? We can just assume GameStop's going to close at 24. It's probably what it'll close at. Unless it sells off into the close like it's been. 6 p.m. to 3 a.m. prime time. I wish I could stream at night. That'd be cool. Nobody really pulls up. I haven't done one in a while, though. Nighttime would be like a good time to stream as well, because a lot of the, that's like daytime for a lot of the foreign viewers. Man, I'm tired, bro. I should have went to the gym. It's my mistake. The reason I didn't go to the gym was because I'm tired, but now I'm just like cooked because I didn't go. Devices cause brain damage in kids. MRI scans show phones are damaging kids' brains. That's scary. I'm not gonna watch that, but that's terrifying. If true, I could see it. Could definitely see it. Still got over 30 minutes before the market closes. How's the golf sim? Oh, that's for Moose. Moosh. Moosh on the loosh. Yeah, I don't know. I need to stop starting the stream so early. Amazon surpasses Walmart in annual revenue for the first time. Both chase AI-fueled growth. It's the only new news that's been posted. Dog abandoned at Las Vegas airport? What the heck? Why would you abandon your dog? What? Couple fined $6,000 after car thief who stole their Lexus wasn't wearing a seatbelt? That doesn't make any sense. Like what? I don't get how that makes sense. Fake news? Question mark. Fake news? Fuck, I'm tired, dude. Can't stop yawning. Sorry to anyone. Sorry to anyone watching the stream right now. I just cannot stop yawning. Ugh. Too bad we can't watch the Toy Story 5 trailer. I don't want to watch that, but unfortunately can't watch movie theater or can't watch movie trailers on stream. Sadly. Let's see. Invesco Ltd sold 395,000 shares, 10% of their position. So a lot less 13Fs coming in. But you're still getting some. And these guys opened a brand new position, 11,000. GameStop pool party? Oh, poll party. Friday, February 20th, kick back, relax, and pull some primo trading cards with other TCG fans. Whether you're pulling or spectating, you'll get a chance to score one of the 3 free PSA submissions. Oh, that's cool. A free PSA submission is valuable. Most definitely. That's kind of cool. Do they have that on their website? I'm the CEO of Opendoor. As a thanks for live streaming our earnings, we will grant you an exclusive invitation to our private island. Send us a DM. No. 1, you're not the CEO of Opendoor. And 2, I don't want to go anywhere near your island. You fucking creep. I'll take his spot. Here, how about you get banned? How about that? Meet the team. Meet the people who make GameStop the best of the best. Get to know your neighborhood store employees over tables of their favorite games. Oh, I was like, damn, are they going to do a meetup with Ryan? That'd be crazy. What's up, Snake? How you doing, bro? How you doing, Snake? CAD USA going to OT in women's hockey. You watching the Olympics right now? Hell yeah. Hell yeah. I haven't kept up with any of the Olympics. I watched like maybe a little bit of the snowboarding, but that's about it. Got it on in the boardroom. That's awesome. I think I saw a clip of Shaun White competing in the snowboarding. I thought that was kind of cool. Buy two, get one pre-owned games. This is usually if you can get some old games. Yeah, if you can buy some retro games, man. Sometimes this is a good deal. My X account is nothing but chick ice skaters. Damn that algo. That's a sounds like a good time. Sounds like a good time. Ice skaters are pretty sexy. Does he still compete? That's crazy. He's old. I think he just did a run. I'm not sure. I just saw a clip of it. I'm not sure if he competed or not. That's why I don't have an X account, Snakes. Yeah, it's just fucking brain rot and thirst traps. Like that's literally all X is. Brain rot. I mean, I guess ice skating isn't necessarily thirst trapping, but there's a reason why they're showing that, you know? It's the same with like the pole vaulting girls. Like there's a reason they're showing that shit. And there's no other reason besides, you know, people are just horny as fuck. Jake Paul's girl boosted speed skating ratings for sure, all-time highs. Yeah, I saw that. Beach volleyball. Yeah, exactly. Exactly. That's for real, his chick. I'm gonna have to put some respect on his name. Yeah, it is. It is. I never looked into the article, but I did see it. But yeah. I think Logan Paul's girl is also a famous something. I forget what it is. Like a runner or some shit. I really don't know. Famous people date famous people. You know? Makes sense. Couldn't be, I feel like it'd be tough to be famous and be just like with a normal person. I don't know. I feel like that would be pretty tough. Hopefully this bet on Opendoor hits. How about you get banned? Don't tell me what to do. I don't want to shower. Maybe you should shower. Some sweaty nerd typing in my chat. Maybe you need to take a shower. That's crazy. Turns out the Opendoor investors they're already piling in. Very great community, you can tell. You can tell it's a really good community. Showering's XP waste. Damn right. Damn right, bro. XP wasting. Who showers? Only noobs shower. Are we waiting for that paint to dry on that door? What? What are you even talking about? What you talking about, Willis? You have calls or puts for open? We'll see. We'll see. We'll see. I don't know. I don't know which way it's gonna go, but whatever way it goes, I'm gonna react the opposite. It's literally what all the fake traders do, except I'm doing the opposite. You know, all the fake traders are like, "Oh, I got this massive bet that I just hit." I'm doing the opposite. I'm doing the opposite. Good lord, is the Opendoor investors like just a bunch of idiots or something? Oh, this guy literally just made a brand new account just to talk shit. What an idiot. What an idiot. Not surprised though. Not surprised. Here, let me check this guy too. It's like watching paint dry because nothing's happening. Oh, I see, I see. Yeah, there's nothing happening. I just don't know what to talk about for the next 20 minutes, so I'm just chilling. Started the stream too early. Ran out of things to talk about. Unfortunate. Unfortunate. Need a poll so we know. Yeah, I'm not gonna do a poll. Yeah, I'll do a poll, I guess. Why not? Or I'll make it simple like everyone else's questions. Bullish or bearish? Little simpleton poll. There you go. There's a poll for you. Will the price go up or down? Yes or no? Exactly. Exactly. What's up, Tater? What's up? It's the first real person who's entered the chat. What's up, Tater? It's about to rip to $9. There's someone out there that thinks that. There's someone out there that thinks that. Oh, it's actually getting bearish votes. That's crazy. That's crazy, bro. That's a first. That is a first. Oh, there's only 5 votes, though. I was here during the Intel earnings a while back. Ah, well, welcome back, my friend. Welcome back. I just don't recognize that name. Appreciate you stopping back in, though. I don't think anyone posted that tweet on Reddit, so I don't know what you're talking about. Yeah, nobody posted it. Yep. Oops. Then 80-20, now 99-1, next 99.9999 divided by 0.001. That's the tweet or what? Well, it should be 80 divided by 20, which is 4. 99 divided by 1, which is 99. 99.9999 divided by 0.0001 is almost a million. So, I don't know what that means either. But that's basically the rundown of it. Some people piling in for the Opendoor now. OT starting now. What is the tweet? It's what Muma said. The 80-20, 99-1. But it's Opendoor time. I mean, you still got like 12 minutes until the market closes, but Opendoor time. Does anyone have any bets on Opendoor? I know I do. Massive bets on Opendoor. I got the whole account on Opendoor, chat. All in. All in. The retirement and everything. Kids' college fund. All in on Opendoor. That's how we do it, bro. That's how you do it, chat. Kid doesn't need to go to college. We got Opendoor to bet on. I've got 3K calls, 7 strike, 1 DTE. Not worried I'm about to print. Damn, that's a good play right there, bro. That's a good play right there. I need them to say hot dog during the earnings call and I can retire from my Kalshi bets. That was funny. That was funny. Holy shit, that was funny. Hugh G's a fucking goon, bro. That shit's so funny. That's so fucking funny, dude. They just gotta say hot dog one time. One time. For the one time. I don't even know the Opendoor CEO. What's his name? For the one time, Kaz Najatian. Say hot dog. Say hot dog. He's gonna start singing the Mickey Mouse song. Hot dog, hot diggity dog. The stock's going down and then it's going up. Good strat. Didn't consider that aspect of the play. Yeah, bro. Kalshi, bro. Gotta get that Kalshi bet in. Maybe that's what Larry was talking about, you know, 99-1 odds, he says hot dog. 99.999 odds that he says hot dog twice. He sounds like a CEO that doesn't eat pork. Why didn't I do my D? Oh my gosh. That's so funny. It's not haram. It's not halal. It's gotta be halal. Well, you can be banned too. I'm actually just gonna ban you because you're such a loser. I'm not even gonna time you out. I'm just gonna ban you. Bro, why are all the Opendoor investors like little pussies? Why is there a bunch of people just coming in and talking shit? Oh, that guy made the account today. Alright. Alright. That makes sense. It's just one loser. It's just one loser who thinks they're funny. Makes sense. Makes sense. It only takes one person to make everyone else look bad, you know? Just takes one person. Makes the whole investor community look bad. You know, I'm about to print. It's just AI FUD trying to get me to sell before close. Yeah, they're just jealous. They're just jealous. I'm about to print on this Kalshi bet. Put the kids' retirement fund on a, or put the kids' college savings on a Kalshi bet. About to make the chat members only, honestly. No one has Opendoor coin. It's time to create it, bro. Now is the time. Get that Opendoor coin up. You got 5 more minutes till the market closes. Oh man. Pretty lame, pretty lame. What's crypto up to? Crypto bounced back a little bit, back to 2.3 trillion. How's the market doing overall? Market's still red. Yep. I don't know what to talk about. I'm sorry. I'm just fucking over here spacing out. I just have nothing to say. Literally. Still 60 minutes until the earnings call, too. Minute by minute manipulation of open stock price. Okay. Is it actually manipulated, or is that just your opinion? Because I don't think that's a real opinion. The entire market is manipulated? No, it's not. Is it manipulated, or are you just a bad investor? I would say you're just a bad investor. If you think the market's manipulated, that just shows that your investment knowledge is lacking. At me getting rage baited? Oh yeah, I'm raging, bro. I'm laughing at you making a bunch of new accounts. Oh no, this is a different guy. This is a different guy. Well, you can laugh your ass off all you want. It's not gonna change the fact that you're a loser. It's not gonna change it's not gonna change anything. You'll be a loser laughing or not laughing. My calls on open are about to print. Alright, well you can be banned then. Keep it coming. I'll just keep banning. See if I care. God, candle inbound. We'll see. We'll see. We'll see. I got a massive bet on this stock, bro. My wife's gonna kill me if it doesn't hit. Might have to sell the car. Any day now, Opendoor. There's no way they already reported. It only moved 1%. I find that there's no way. There's no way it's reported yet. Definitely not. Oh, wow. No, my puts, chat. No, it's up 10%. No, 11, stop. Oh no, dude, my wife's gonna kill me, bro. Oh, she's gonna kill me. I just bet the entire family's retirement on puts. It's over, chat. Oh, chat, I gotta go. I gotta go, chat. This is bad. This is really bad. Oh, this is bad, chat. Oh, this is bad, chat. The puts aren't printing. No, chat. This is actually the first earnings report we've done where the stock's gone up. All jokes aside. All jokes aside, I think this is the first earnings report that's gone up. Alright, let's see. Let's see. Nah, they're not gonna drop it, bro. I'm screwed. My wife's gonna kill me. I just bet everything on this stock. She's actually gonna kill me. Probably getting a divorce now. Gonna have to sell the car. Fuck. Shit. Ah, dude, how am I gonna tell her, chat? How am I gonna tell her? She's gonna be so pissed, bro. How am I gonna tell her that we lost everything? Like, I don't know what I'm gonna do, bro. I don't know what I'm gonna do. Fuck, chat. Oh, we're screwed, dude. She's gonna kill me, bro. She's gonna kill me, chat. Sell a kidney? There you go. Good advice there, Grady. I will sell my kidney. That's some proper advice. Proper advice there. Sell the silver? I already sold all my silver because of Carvana calls, man. I already sold all my silver, bro. Carvana screwed me over. I don't have much else. I don't have much left. These earnings calls are just killing me, man. I'm just losing everything. Like, I might have to sell my house soon if, like, none of these bets hit. Like, I don't know what to do, bro. I don't know what to do, chat. Like, we're screwed. I seriously might have to sell my house soon. Like, if I don't get, like, a good earnings play at some point, I don't know what I'm gonna do, chat. Like, straight up. I don't know what I'm gonna do. Alright. Q4 2025 open house. Opendoor 2.0 does what it said it would, delivering acquisition growth, faster inventory turns, and stronger cohorts. October 2025 acquisition cohort is best performing October in company's history. Acquisitions increased 46% quarter over quarter, while inventory days in possession reduced 23%. Opendoor, leading e-commerce platform for residential real estate transactions, today reported financial results for its fourth quarter and year ended December 31st, 2025. Last quarter, we outlined a 4-step plan to transform Opendoor, reach break-even adjusted net income by the end of 2026, on a 12-month go-forward basis, drive positive unit economics, while increasing transaction velocity, transition to the direct-to-consumer relationship, and expand our product suite. This quarter demonstrates we are executing on that plan. These results reflect structural improvements in how we operate with more accurate pricing, faster inventory turns, and disciplined selection. The evidence of progress is clear. We increased our home purchase by 46% quarter over quarter, significantly reduced our capital intensity by expanding Cash Plus such that it is now 35% of our weekly volume, and we reduced average days in possession of our inventory by 23%. Most significantly, our October 2025 acquisition cohort, both in the first full month under the Opendoor 2.0 model and the first with the mature sell-through data, is tracking to deliver the strongest contribution margins of any October cohort in the company's history. And these homes are selling at more than twice the velocity of the October 2024 cohort, with over 50% already sold or under resale contract. While our new cohorts are still early in their sell-through, we like what we see, and our Q1 2026 contribution margin guide post reflects our confidence in the trajectory for the portfolio. As we introduced last quarter, we're executing against 3 management objectives critical to reaching profitability. Table shows progress against each objective this quarter. Let's see. Oh, wow. No, my... I can't take this seriously. The stream clips are just too funny, bro. They're just too funny. All right. One sec. I'll read the rest of this in a second. Hold up. Oh, I forget that you can just do that. Oh, nice. Perfect. All right. Scale acquisitions. How can you hold us accountable? Acquisition contract dashboard. How we're executing. Homes purchased increased 46% from the prior quarter. Weekly acquisition contracts more than quadrupled from the end of Q3 2025 to the most recent week. 2, improve unit economics and resale velocity. Percent of homes on the market over 120 days declined from 51% to 33% quarter over quarter. Build operating leverage. Fixed operating expenses were $35 million in Q4 2025 compared to $37 million in Q3 2025 and $43 million in Q4 2024, down $2 million quarter over quarter and $8 million year over year. Trailing 12-month operations expense as a percent of revenue held steady at 1.3% quarter over quarter. No, my puts, chat! I can't, bro. It's just too funny, bro. It's just too funny. No, it's up 10%. No, 11, stop. Oh no, dude, my wife's gonna kill me, bro. Oh, she's gonna kill me. I just bet the entire family's retirement on puts. It's over, chat. Oh, chat, I gotta go. Chat. This is bad. This is really bad. Okay. I gotta go, chat. This is bad. It's too funny, bro. It's too funny. It's too funny. All right. Is there anything else here? Okay, there's financial outlook. One sec. I gotta get this video uploaded real quick. Oops. Okay. All right, financial outlook. We're focused on making the right long-term decisions to rebuild Opendoor. Rather than managing to short-term guidance, we're making meaningful progress and remain focused on execution. With that context, we want to provide you with the following guideposts. We're driving to adjusted net income positive by the end of 2026, measured on a 12-month go-forward basis. Q1 2026 financial outlook. Revenue expect to decrease approximately 10% quarter over quarter. Contribution margin. Our contribution margin bottomed out in September and has been improving every month since. We expect to exit Q1 2026 with the highest contribution margin we've posted since Q2 2024. Adjusted EBITDA, we expect Q1 2026 adjusted EBITDA loss in the low to mid 30 millions. There's not much else here. Basically just the normal stuff that's always in earnings reports. Let's see, about Opendoor. Opendoor's mission is to tilt the world in favor of homeowners and those working hard to become one. Since 2014, the company has provided people across the US with a simpler, more certain way to sell and buy a home. Opendoor currently operates in markets nationwide. Okay, that didn't tell much. That didn't tell very much. Is there anything? Did they upload their 8K yet? Of course not. Why would they do that? Why would you upload an 8K? Wow. It's up a lot, actually. It's actually up a lot. All right, let's see if we can have another decently successful short, I guess. We'll see. We'll see. Up 16%, bro. That's quite a bit. Quite a bit. Congrats to Muma, bro. Those 3K calls, bro. You're gonna retire off that, I think. That's massive. That was a massive bet. Shout out to all the god traders in the chat, bro. Everyone in the chat bought calls except me. I'm screwed. You bought puts? Yeah, bro. I bet everything I had on puts. I lost it all. Screwed, man. My wife's gonna be pissed when she gets home. Absolutely pissed. Not good, not good. From your pocket to mine. Oh my god. That's hilarious. I started Opendoor coin. Let's go. Maybe I can make it all back, bro. Maybe I can make it all back on Opendoor coin. How much did you bet? I bet it all, bro. Every dollar I had. All in. It's all gone. It's all gone. I even used leverage. Like, I needed this bet, bro. I needed it. Gonna have to sell the car. I might even have to sell the dog. Like, I might not even be able to, like, take care of my dog anymore. I lost so much. I'll take over my profits and pump it. If it's not obvious, I'm joking. I don't know if that's not obvious. I'm joking. Maybe I shouldn't even say that. Maybe I should just keep playing. Maybe I shouldn't even tell people I'm joking. It's crazy how many people actually, like, believe when I say these things. Like, Rix and Gracie, you've been in I feel like you've been in this stream a bunch of times, and you've been watching this stream a while. Like, you know I'm a GameStop degenerate. You know every dollar I have goes to GameStop, so, like, you know, you should know I'm joking. You should know I'm joking. I was confused. That's why it's so funny. Never watched you before, so I believed it. Bro, it's just so funny. It's just so funny how many people fall for it. It's just hilarious. I don't know. I think it's funny. And it's even better when you post the short. But for intensive purposes, you know, I did short it, and we're losing. We got to sell the dog. I was thinking, why is he playing earnings puts? For real, for real. So funny. When does the earnings call start? Oh, not for another 30 minutes? Rip. It's gonna be a while. It's going to be a while. They dropped their 8K yet? Ah, there's the 8K. See what this says. No, it's literally the same thing, just different format. Oh look, some charts. Macro charts. MLS clearance rate. OD price weighted gross clearance rate. Excuse me. MLS contracts. I got hiccups. No. No. That's what happens when you lose all your money. You get hiccups. Some interesting charts, I guess. Not really. Okay. It's only got 14 I might have made that stream clip too long. It was like 26 seconds long. Probably needs to be more in like the 15-second range. But I guess we'll see. It did just get posted. Not to mention with open, I bet insider buying comes after that. Didn't they already have insider buying recently? I don't want to watch an ad. Oh yeah, it was the CEO bought back in November. Back when the stock was $8. Interesting. Interesting. He's about to load up again. Maybe. Maybe. Maybe he already did. Maybe that's why the price is up. Who knows? They have blackout periods. Ah. Good point. Good point. Good point. Why do they gotta be black, though? I wish they had more to read for their earnings, but not much to read. Because they're long periods. Good lord. Good lord. You nasty. That's nasty. Oh, you nasty boy. You a nasty little boy. We always take a long time to do anything. That's fair too. I guess it has multiple meanings. Maybe I'm the nasty one. I guess I'm the nasty one. Putting it in my face, bro. Like, now you nasty. Nah, you nasty. Nah, they're always on time, bro. They're never late. What do you mean? They're never on the phone either. Get any news or anything after hours? Probably not. I don't know who that is. Yeah, of course not. Nothing exciting. Am I still banned from this website? Oh, there we go. Yeah, Alibaba did have earnings today. Copar, Extra Space, Texas Roadhouse, Sprouts, Dropbox. There's quite a bit of earnings today, actually. What was I was gonna do something. I forgot what it was. Guess it's not very important then. Guess it's not very important. Should we see how this short's doing? See if it's actually working out. Oh yeah, it's kind of starting to ramp a little bit. Starting to ramp a little bit. Oy. Man, this is... Well, I wish every company would just start their earnings calls at like 2:30. That would be so convenient. It kind of sucks when they start at 3. I guess we can look at some other tickers for a second. Texas Roadhouse, that's up. What else? Dropbox. Dropbox is flat. Copart, that's probably flat. Oh wow, down to 10%. Copart. Wow. What other ones were there? Baba. Did Baba report? Nah, Baba's flat. That might have reported in the morning. Extra Space Storage. Flat. Probably hasn't reported yet. Sprouts. How did Sprouts do? Sprouts is up a little bit. Okay. Just waiting forever for the earnings call, like normal. Appreciate everyone here, though. Thanks for being here. Hit the like button. Share the stream. And yeah, appreciate you. Earnings call should be starting here soon. Sheesh. Still going up. Up over 15% now. Wasn't this stock at like $8 though? Oh yeah, it hit 10. Still wild. 16% now, wow. It's ripping. It's ripping, chat. I'll be right back. I'm back. Zoom out on the stock and see what it was like when housing was booming. That was when it IPO'd. That doesn't count. That doesn't count. I can look up every stock that IPO'd within the past 5 years, and basically all the charts look the same. Not saying it can't go back up to those prices, but I don't think that's relevant. That was the first year it was even on the market, and everything was overvalued in those times. And if you're looking at that, that means that back then it was sitting at like 8 billion market cap. That is kind of ridiculous. I don't think this stock's worth that. I don't even think it's worth what it is now. Oh, they dropped the 10K, nice. They lost 1.3 billion. Is that billion? Yeah. They're only sitting on 1.4 billion and yeah. I mean, it's not like crazy overvalued. I've definitely seen more overvalued things, but their losses are only increasing, so I don't know. I don't know about all that. I don't know about all that. I don't know why it's up so much, honestly. Any day now, this earnings call can start. How'd the market do? Oh, the market, or the Russell ended up bouncing. Yeah, we've been streaming for 4 hours already. Good lord! Nope. No music. No music. Did anyone make a bag on some Opendoor calls or what? I remember last May no one cared about Open. Yeah, because it was like worth pennies. It was worth pennies last May. People only care about stocks when they're going up. And though it's been going down the last couple months, it's still up massive overall. It's just I don't get it. I don't get why people only care when stock prices are going up. I'll never understand it, but that's just what it is, man. People just fucking chase what everyone else is chasing. It's kind of interesting. They just follow the crowds. Still not as well, I mean, I guess they're having their earnings call on YouTube, so like that's cutting into a lot of people coming here, I'm sure. With a story like GameStop, I couldn't imagine investing in anything else. Yeah, facts. Well, I mean, the story, but also the stock price compared to the business. Like the values there, you know? It's hard to find value like that in today's market. Everything's just so overvalued. Most things, I guess I should say. Not everything. There's some good plays out there, I'm sure, if you put in the effort to research. But, yeah. I mean, if you're looking out 10, 20, 30 years, there's not much that has the value potential. You know, there's a lot of businesses that are going to continue to absolutely crush and do extremely well in the next 10, 20, 30 years, but it doesn't mean that the stock price is going to have the same amount of gains as it's had the past 10, 20, 30 years. Tired of seeing plays go nuts and we're still frozen. I don't really care, but man, oh man. Yeah, but you're not going to win every trade. That's like the whole point of why I talk so much shit on trading is, you know, it looks enticing to bet on these things, but the reality is you're going to hit one trade and then you're going to lose one and then you're going to hit one and then you're going to hit another and then you're going to lose like 3 and then you're going to hit like 4. Like, there's no guarantee to make money on these plays. So I get what you're saying, but at the same time, it's doesn't really make any sense to just like try to trade all the time. There's just no guarantee of profit. There's no guarantee of profit in investing in GameStop either, but I just think it's a little different. Like, I go through this example a lot, but what happens when you make 5-10 grand one year and then you pay like $1 grand or 2 in taxes and then you lose 5-10 grand another year, or you know, you just paid taxes for no reason, so you lost money. Like, it just seems pointless to chase every stock play, to me. And like, if you really wanted money, you could just sell calls. Like, realistically, you could just sell calls. You get a tax credit on a loss. Okay. What does that have to do with being profitable one year and then losing? You already paid the taxes. The tax credit would only be beneficial if you lost the first year and then won the second year. That's the only way that would matter. If you make money and then lose the next year, if you make money one year and then lose the next year, you paid taxes for no reason. That tax credit has no benefit to you. Make tenfold back with Jimmy. Potentially. Oh, bro. Ryan Cohen himself said it's going to be a several $100 billion company. I'm not worried, bro. It's going to be 100x. I might be like old and potentially dead when it hits 100x, but still. It's gonna 100x. Yeah. Opendoor got some bangers on the earnings call. Damn, they got some bangers playing, bro. They got some bangers. Well, let me hear this shit. I'm gonna mute the mic for a second. I gotta hear these bangers, bro. Bro, it's literally it's AI music about Opendoor. It's literally AI music about Opendoor. That's so funny. Bro, Opendoor is memeing, bro. Opendoor is the newest meme stock. They got fucking AI music on their earnings call. Oh my god, that's funny. That's so funny, bro. That's hilarious. 3,300 tax credit only. Yeah, for sure. You don't get exactly. If you lost like 5-10 grand or something, you don't even get that full tax credit. That's a good point. I don't know the exact minimum for every country or whatever, but yeah, there is a maximum tax. Yeah, good point. Sold some CCs. Well, I don't really care. The freeze is nice. Make little, add some more. Yeah, exactly. I mean, I don't sell covered calls, but like, you could. You know, I could go make like 20-30 grand selling covered calls right now if I really wanted. The only risk is you have to sell your shares. Like, there's a lot of benefits to, you know, being a shareholder, I guess. I guess we'll, you know, time will tell. I'm just not gonna fall for the allure of short-term trading. I've done that for a long time. You know, I've been short-term trading for the past 5-6 years, every single day. You know, like, I've had my experience short-term trading, and it's not it's not what the internet makes it seem like. It's definitely not. I don't know what you're asking, Calzone. I don't know what you're asking. Earnings call should be starting any minute now. Make sure you share the stream. Asking if Open will be open to higher prices in the near term. I have no clue, my friend. Nobody knows. Anyone who tries to convince you that they know is probably trying to sell you a course, so that's just not a question that's even answerable. from my perspective, Opendoor is overvalued, but it doesn't mean the stock can't go up. They lost 1.3 billion this year. Like, it's not a good business. But a stock price going up or down doesn't necessarily mean anything about the business. So, from a business perspective, I would say no. But anything's possible. In a market where people just FOMO into random stocks, anything's possible. They're still playing the AI music. The Opendoor AI music. Crazy. Crazy stuff. Should be starting any minute now. So share the stream. Hit the like button if you have not. If you're not gonna share the stream, at least hit the like button. Open is a bridge for liquidity within the housing market, rotates distressed properties, or buys a grandma's house if she dies suddenly and the family wants a quick sale. I like a greedy middleman. Bullish. I mean, they lost 1.3 billion though, so I just can't be bullish on something that's losing that much money. And it's, you know, sitting at a potentially overvalued stock price. It's tough to be bullish on. The business model's interesting, sure. I can agree with that, but it's losing way too much. How come it's not... What's going on here? Oh, yeah. AI music, let's go. Yeah. AI music. This is the weirdest earnings call right now. Why do they... This is a weird earnings call. This is a weird earnings call. What is going on right now? I've never seen an earnings... Well, that's a lie. Didn't Google have a bunch of commercials before the earnings call? I think Google had a bunch of commercials before the earnings call. So, I guess it's not the first time. Trying to give the personal touch. Buying a house is an emotional thing. Oh yeah. The biggest purchase most people will ever do in their life. All right, here we go.
It's why the results we're sharing today matter, because every number behind them represents a homeowner who got to focus on what comes next instead of what comes with selling. I'm Michael Judd, Opendoor's Head of Investor Relations. Welcome to Opendoor's fourth quarter 2025 earnings live stream. Details of our results and additional management commentary are available in our earnings release, which can be found at investor.opendoor.com. The following discussion contains forward-looking statements within the meaning of the federal securities laws. All statements other than statements of historical fact are statements that could be deemed forward-looking, including, but not limited to, statements regarding Opendoor's financial condition, anticipated financial performance, business strategy and plans, market opportunity and expansion, and management objectives for future operations. These statements are neither promises nor guarantees, and undue reliance should not be placed on them. Such forward-looking statements involve risk and uncertainties that may cause actual results to differ materially from those discussed here. Additional information that could cause actual results to differ from forward-looking statements can be found in the Risk Factors section of Opendoor's most recent annual report on Form 10-K for the year ended December 31st, 2025, and other filings with the SEC. Any forward-looking statements made on this webcast, including responses to your questions, are based on management's reasonable current expectations and assumptions as of today, and Opendoor assumes no obligation to update or revise them, whether as a result of new information, future events, or otherwise, except as required by law. The following discussion contains references to certain non-GAAP financial measures. The company believes these non-GAAP financial measures are useful to investors as supplemental operational measurements to evaluate the company's financial performance. For a reconciliation of each of these non-GAAP financial measures to the most directly comparable GAAP metric, please see our website at investor.opendoor.com. With that, let's get into the open house with Kaz and Christy.
Good afternoon, everyone. Early in my career, I used to write a plan that told my team what we were going to get done during any given cycle. Then, at the end of the cycle, I would go through the doc and color every sentence of the plan, green, yellow, or red, based on whether we had done what we said we would do and if we were on track to go where we wanted to go. I've kind of always found it useful to write things down so you can hold yourself to account. With that in mind, I'd like to remind you of the last financial open house. In my first open house, I told you that we had a 4-step plan to turn Opendoor around with renewed energy. Let's go back in time and listen to what I said. So here's our 4-step plan to channel that energy. First, by the end of next year, we will drive Opendoor to break even. We think about this in terms of adjusted net income on a 12-month go-forward basis. That means Opendoor will start generating cash and will never be forced to raise equity ever again. Second, we will drive significant positive unit economics while increasing the velocity at which we transact in homes. This includes launching financial services like mortgage. Third, as we increase our unit economics, we will change the company's focus from primarily building channels to transacting directly with buyers and sellers. We're also going to focus on reducing our days in possession rather than arbitrarily increasing spread, which has had genuine significant negative consequences for us. Fourth, once we've accomplished the first 3 steps, we're going to focus on allowing buyers and sellers to transact on Opendoor without having to buy or sell from Opendoor. This is going to significantly lower our capital risk, but more importantly, it's going to give folks options they want. Today, I want to grade Opendoor against these 4 steps, and then I'll give you some details. Here's the bottom line. We did what we said we would do. But let's go through this line by line. So, we're on track for our first step. We're driving Opendoor to be adjusted net income positive by the end of 2026 on a 12-month go-forward basis. The goal is simple. Start by generating cash and never be forced to raise equity ever again. Second, since September, we've increased our acquisition velocity by 300%. We bought 537 homes last week alone. In the last week of the third quarter, we did only 128. And we grew while we drove significant positive unit economics. This improvement is a result of deliberate change to our product, our pricing strategy, and our operations. Most importantly, our October 2025 cohort, which is the first full cohort under Opendoor 2.0, and is the first one with enough sell-through data, is performing really well. I'll get back to this in a second. Third line, we grew our D2C acquisition contracts while reducing our average days in possession. Comparing this last week to the last week of the third quarter, We've grown our D2C acquisitions by almost 700% and reduced our days in possession by almost 25%. Fourth, we've made it easier for sellers to choose the path that works best for them. And increasingly, they're choosing our capital-light product, Cash Plus. In the last week of Q3, Cash Plus was about 19% of our total contracts. Last week, it was 35% of a much higher volume. To give you a sense, Cash Plus was over 600% bigger last week than it was in the last week of Q3. This is the first step towards our goal of allowing buyers and sellers to eventually transact directly with each other. Christy is going to go through all the details of all the financials, but before she does, I want to say this. We laid out a plan for you. We're going to turn this company around, and we laid that plan out during Opendoor 2.0's first open house. That plan is working. We're green all across. We're already delivering results and are on track to deliver against our mission. In a minute, I'm going to tell you a lot about our product changes and all the things we've done since Q3. I'm really proud of how fast our team is moving and how much we're shipping. And the list I'll tell you about is a public CEO's dream. It sounds good in a script and it looks amazing in a pitch deck. But look, I know what this sounds like. New products, expanded TAM, ops improvement, pricing efficiencies, and a bunch of business school words like strategic operationalization of North Star and paradigm shifts with best-in-class synergy. Oh, flywheel. Look, I get it. Every public company does this stupid dance that pretends folks can't look at the slope of a graph. One of my favorite investors, Sir John Templeton, used to say, the four most dangerous words in investing are, this time it's different. So I'm not going to sit here and say random school words and ask you to believe that this time it's different. This time, I'm going to show you. Our October acquisition cohort, which is the first cohort of Opendoor 2.0 that has had reasonable sell-through data, is on track to be the most profitable October cohort in company history. Again, when it comes to the key metric that matters, our contribution margin, October 2025 is on track to be the most profitable October since Opendoor was incorporated. And we achieved this in the middle of the most aggressive market expansion in Opendoor's history. Given that this isn't really the strongest housing market, this performance, I think, shows a structural shift in how we operate. A shift that I genuinely think will be durable across macro cycles. We are no longer a prop desk. We're now a market maker. And I want to put a finer point on this cohort. What makes this cohort significant isn't just the margin level. It's the shape of the cohort. From 10% to 50% sold through, our margin degradation relative to home price appreciation has been the lowest of any cohort in our history. Not any October cohort, any cohort, period. That the October cohort is going so well is not a plan, it's a proof point. The product launches I'm going to talk to you about aren't promises of things that might work. They're the explanation for why October happened and why it's repeatable. Now look, because we're committed to transparency, let me get ahead of a couple of things. October was not our largest cohort by volume, but it was about double the size of what we were doing just a few months ago. We're not getting lucky on a few homes in a friendly market. And given how the past few weeks have gone, I believe we're on track to significantly increase our acquisition size as we said we would do. What October shows is that the structural changes we made under Opendoor 2.0 are working. And then we're compounding those learnings into every single cohort going forward. We have a lot left to prove. I know that, but for the first time, we're not asking you to take our word for it. This is a new company. Look, the way I think about my job is that my job is to build Opendoor as though it's product. Just like Tesla builds robots that build cars, my job is to build the tools and the systems inside Opendoor that help us build a great product. In the last few months, we've made a great deal of progress on this front. I don't want to spend a lot of time talking about this, but I kind of want to take a second to talk about the most important part of it. As Vinod Khosla says, the team you build is the company you build, not the plan you make. Today, 18 people report to me at Opendoor. Of those 18, 10 didn't even work at Opendoor a year ago. Our 10K filing has a list of our executive team, and you can take a look at it. Not a single one of those people on that list was in our last filing. Since I joined Opendoor, we have a new chief operating officer, a new CFO, a new president, a new chief growth officer, a new chief people officer, and a new chief business officer. This is a world-class leadership team that I would put up against any other tech company. And on top of this, Opendoor 2.0 is the single most AI-pilled company in the public market that I know of. Let me give you an example. Not that long ago, after we bought a home, someone on our team would sit at their desk and manually pull up data from 5 different systems. Things like property records, inspection notes, HOA docs, pricing history, contract terms, stuff like that. And they would copy these things field by field into a seller disclosure PDF. It took hours per home, every single time. Last week, someone at Opendoor shipped an AI workflow that does all of this kind of automatically with no humans in the loop. It queries our data warehouse, cross-references inspection history, and generates a plain English disclosure summary, fills a compliance PDF, and then sends it out for review. But here's the best part. Other companies talk about how AI native their engineers are. The person I just talked about, that person is not an engineer. He works on our ops team. He built this in his spare time in a week. No ticket field, no sprint planned. No one asked him to do this. He understood this simple fact. It's wartime, and our primary weapon is our ability to prompt machines to create a new world. And he's not the only person doing this. Our ops team, sales team, compliance teams, they're all building their own tools now. Now, if this is what our ops team does, I want you to imagine what our engineers are up to. So when I say we default to AI, I don't mean engineers use Copilot. That's not what I mean. Opendoor is a different type of company. It's a company where everyone is learning how to think like an engineer. Okay, with that, let's talk about what we built. We shipped a lot in Q4. I'll try to move through this fast, but I want you to see how what we shipped caused the October results. Okay, we shipped across 3 fronts: better products, bigger markets, and stronger margins. And we did this, well, faster. First, we made our products better for buyers and sellers. For years, Opendoor's product was a one-size-fits-all product. You want to sell a home? Here's an offer. Take it or leave it. But look, all sellers are not the same. Someone with 80% equity in their home doesn't have the same needs as someone with 20%. But under the old model, both of these folks paid the same fee, which means that we were taking on risk that neither side wanted. The seller didn't need it, and we didn't want it, but the product forced it. That's not a pricing problem. It's not an underwriting problem. It's a product problem. So we fixed it. We now put the ability to change the offer that fits your needs into your hands. You choose how much cash you want upfront, and the fee adjusts. Take less upfront, pay less in fees, often a lot less. Every dollar that a seller does not need upfront is a dollar that we don't need to put at risk, and a dollar that they don't need to pay for. So they pay less and we make more. It's a win-win. And it also allows us to serve customers that we could have never served before. This risk reduction, it allows us to do something else too. It allows us to tighten spreads on our core cash product. It's early, but from best I can tell, this is working. We're seeing demand that we would have never seen before. And because we're seeing a lot of extra demand, we also launched our self-assessment app. With our self-assessment app, the seller takes pictures of their home and AI does the assessment work. No humans needed. And because there are no humans in the loop, in January, we nearly doubled the number of homes that we assessed compared to September. And so far this month, about half the homes we've assessed have needed 0 people to show up at your doorstep. On top of this, we expanded our buyer products, Opendoor Checkout. As of this morning, it is now live in 40 states. Opendoor Checkout embeds mortgage pre-approval directly. It also supports Opendoor's Heroes Home Credit, where we give the brave men and women of America's armed forces $4,000 towards closing costs of a home. Opendoor Checkout also includes the Opendoor Guarantee. It allows for free cancellation, warranty, and early move-in. We also launched our Seller Guarantee. When a seller sells us a house using Cash Plus, they now get a chance to make sure they like how we are selling the home. If they don't, they can just undo the transaction and take the home back by paying us a low restocking fee. Okay, that was the core product. Outside the core product, we also expanded our growth levers. To start, we dramatically expanded how many people we could serve by expanding our geo coverage and our buy box. It took Opendoor from 2015 to 2025 to become available as an option for about 1/3 of the homes in the US. 10 years. Opendoor 2.0 almost tripled that in about 10 weeks. Thanks to AI, our product went from being available to about 1 to every 3 homeowners to being available to nearly every homeowner in the lower 48. Now, you would expect that that kind of rapid expansion would introduce risk, sloppy underwriting, margin compression, operational blowups. We saw the opposite. You'll hear Christy talk about our margin guide points in a bit, but the new system is working, and it's already generating thousands of incremental qualified leads per week with 0 incremental marketing spend. Making this work well required us to build across almost 200 MLS data sets, coordinate over 100 brokerage regions, and expose 150 standardized listing attributes. This was hard work, but we believe software should not be limited by zip codes. And as we expand our product, we also significantly improved our data ingestion. We now have a nearly real-time data ingestion with over 1,000 pipelines. They serve our new market-agnostic pricing tools, and we also have a new ML model that predicts customer conversion propensity at the time of underwriting. It uses like a dozen different data points so we can best target our sales and marketing efforts. And because we have all these new potential customers, we also focused on making sure we can grow profitably. I want to tell you something a little counterintuitive. Usually CEOs get in front of investors and say, we're focused on cutting costs. And usually that doesn't work, and actually it increases costs. So we didn't do that. We didn't focus on cutting costs to improve margins. We focused on improving the product and taking pride in our code. And the costs started disappearing kind of on their own. Look, Products frequently get better by removing things, not adding them, by deleting code, not writing it. So we deleted a lot of things. They just weren't needed. Last quarter, I talked to you about the actual debt that was weighing down the company. We're now focused on a different kind of debt, but one that is just genuinely equally pernicious. There's a concept in engineering called tech debt. It's the accumulated cost of every shortcut, every extra layer, every microservice that was added for no goddamn reason. This tech debt across the entire stack is the reason that it's 2026 and connecting an office printer still feels a little like defusing a bomb. And honestly, before the recent changes, Opendoor wasn't that much better than your printer. We weren't just carrying tech debt. We were also carrying organizational debt. And the interest payments on these bad decisions were just killing us. So we started paying this down, and the results are just wonderful. When Opendoor entered 2025, our annual run rate costs on hosting was $12 million a year. Exiting 2025, Opendoor 2.0's cost on hosting infrastructure is less than $5 million a year. We haven't just significantly cut the cost of providing our products to our customers, we've also made the product better. We also significantly increased the sample set used in our valuation model while decreasing our cost. This means that the runtime in our model was reduced by about 50%, from 12 hours to 5.5 hours. The entire pipeline can now run in a script that's about 50 lines of code, and the feature building DAGs are now 90% cheaper. This saves us at least $1 million a year. We also replaced third-party tools with in-house vision models for thinking through home conditions. Not only did this save us a few $1 million in backfill costs for large-scale experiments, it also brought a core AI capability fully in-house and cut the processing time for 100,000 listings from 34 hours to just 4. Cheaper, better, faster. On top of this, we also cut over $1 million in cost by replacing SaaS tools with more cost-effective and genuinely better AI alternative. And we stopped paying for tools we barely used. Land and expand SaaS no longer works inside Opendoor. And we didn't just cut costs and focus on better infrastructure. We also invested in advanced ML models and data-driven pricing strategies. They're improving our margins per home while maintaining or actually improving our conversion rate. Our home sale pricing is now powered by our new ML model that avoids Opendoor's previous policy of just blanketed price drops. The model now helps us make targeted pricing decisions for every single home. We also built a new home-level days in possession model using real demand signals. I think this is going to increase our dispersion by about 2x. Okay, that's a lot. Let's take a step back. Look, I opened this call by grading Opendoor against the plan that we laid out last quarter. Green, yellow, red. We're not cowering. We're going to keep doing this every single quarter. You can track our acquisition contracts and our progress in real time at accountable.opendoor.com. We're going to revisit this every single quarter, just like we did right now. And we're going to make it reflect our path to profitability. As we learn more, we'll tell you more. You can see the results of our work, what we shipped, and whether it moved the needle. Please hold us to it. We're asking you to hold us accountable because this matters. There are millions of families in this country where the experience of buying or selling a home is so bad, so slow, so uncertain that people who want to do it just don't. This is a hard problem, but we're going to fix it. And for the first time, we have the team, technology, and the proof points to actually do it. If you have questions about anything, DM me on X. Seriously, DM me on X. I'll try to answer your questions. We're not hiding behind consultants or scripted callbacks. That's not how we operate. Christy's gonna walk you through numbers, but to steal a bit of her thunder, the numbers are good. Christy?
Thank you, Kaz. Bottom line, we're executing. Last quarter, we laid out 3 goals: scale acquisitions, improve unit economics and resale velocity, and build operating leverage, and we delivered on all 3. We increased acquisitions 46% from the third quarter. Our October 2025 acquisition contract cohort is over 50% sold through or in resale contract. This represents over a 2x improvement in resale velocity compared to October 2024, and a roughly 50% improvement from October 2023. At 50% sold through, this cohort is yielding the highest contribution margins for an October acquisition cohort in company history. And we delivered all of this while reducing fixed operating expenses and holding trailing 12-month variable operations expense flat as a percentage of revenue. Our fourth quarter results reflect the early days of Opendoor 2.0. While we implemented the operational changes Kaz described, it's important to note that 94% of the homes we sold in Q4 were acquired before October. We were clearing the old book while building the new one with higher quality homes. In the fourth quarter, we purchased 1,706 homes, an increase of 46% from Q3. This marked an important inflection point as we shifted from the high spread posture of the first 3 quarters to a more tailored approach. We provided stronger offers for higher quality homes with greater expected resale velocity and maintained higher spreads for lower quality homes with elevated risk and slower resale clearance expectations. We delivered revenue of $736 million, representing a 20% quarter-over-quarter decline, meaningfully better than our guidepost of a 35% quarter-over-quarter decline. We sold through more aged inventory than initially forecasted, a direct result of the resale velocity improvements we've made. As anticipated, our margins faced near-term pressure as we worked through legacy inventory. GAAP gross profit was $57 million in Q4 compared to $66 million in Q3. GAAP gross margin was 7.7%, up 50 basis points sequentially. Contribution profit was $7 million and contribution margin was 1% compared to contribution profit of $20 million and contribution margin of 2.2% in Q3. This sequential decline reflects the continued clearing of older, lower quality inventory acquired during the prior high-sped strategy and Q3's historically low acquisition volumes, leaving us with minimal new inventory to improve the mix. Adjusted EBITDA loss was $43 million compared to $33 million in Q3 and exceeded the favorable end of our guidance range of a high 40s to mid $50 million loss. Net loss for the fourth quarter was $1.1 billion compared to $90 million in Q3. This included a $933 million non-cash loss from last quarter's convertible note refinancing. Adjusted net loss, which excludes that item, totaled $62 million compared to $61 million in Q3. Turning to our balance sheet and capital structure, we ended the quarter with $962 million in unrestricted cash and $133 million of equity invested in homes. We held 2,867 homes at quarter end, representing $925 million in net inventory. Our non-recourse asset-backed borrowing capacity remains robust at $7.2 billion, with total committed borrowing capacity of $1.6 billion. These facilities, built over years of partnership with our lenders, provided us the flexibility to scale as we execute our growth plan. Last earnings call, we announced the refinancing of the majority of our convertible notes with equity, eliminating a near-term repayment trigger. We reduced our cash interest burden, and we issued the warrants dividend to align our shareholders directly with the upside we're working to create. The foundation is set for Opendoor 2.0 operating model, and now we're focused on delivery. As we introduced last quarter, we are executing against 3 management objectives we believe are key to reaching profitability. The table in our earnings release shows our progress against each objective. Let me walk you through the highlights. First, scale acquisitions. We increased homes purchased by 46% quarter over quarter, from 1,169 homes in Q3 to 1,706 homes in Q4. Last week, we signed 537 acquisition contracts, up from 236 contracts at the time of our last earnings call. You can continue to track our weekly progress on our dashboard at accountable.opendoor.com. Second, improve unit economics and resale velocity. We made significant progress on resale velocity this quarter. The percentage of Opendoor homes on the market for greater than 120 days decreased from 51% at the end of Q3 to 33% at the end of Q4, an 18 percentage point improvement in a single quarter. This reflects the operational changes we've made to move homes faster. Better pricing, more robust monitoring system, and an improved buyer experience through products like Opendoor Checkout. In addition, the margin performance and resale velocity of the October acquisition cohort demonstrates the improvements we've made in pricing and selection. I also want to be clear about what this means for our go-forward strategy. October's margins thus far have come in above our long-term target range. That's a good problem to have, but you should not expect every quarter to look like October on a margin basis. You should expect us to reinvest that spread advantage into growth, faster turns, broader coverage, and more competitive offers, while we aim to maintain contribution margins within our target range. You can track our product, feature, and partnership launches on accountable.opendoor.com to see how we're continuing to build velocity into the business. Third, build operating leverage. On our last earnings call, we committed to holding fixed operating expenses flat and trailing 12-month operations expense, the variable component of our operating expenses, flat or down as a percentage of revenue. We achieved both goals. Fixed operating expenses were $35 million in Q4 2025 compared to $37 million in Q3 2025 and $43 million in Q4 2024, down $2 million quarter over quarter and $8 million year over year. Our trailing 12-month operations expense as a percentage of trailing 12-month revenue held steady at 1.3% in Q4. As we scale acquisitions from this lower cost base, we expect meaningful operating leverage to emerge in 2026. These three objectives remain the foundation of our path to profitability, and we're executing against them with discipline, transparency. As I said last quarter, you can't build a great business in a spreadsheet. You build it by shipping product, operating with discipline, and learning from the market. Now let me give you some guideposts for Q1 and the year ahead. Acquisitions. Our profitability framework remains unchanged. We're targeting approximately 6,000 quarterly home acquisitions as we exit Q4 2026. As we've learned more in production, we're refining our acquisition trajectory to be more weighted to the back half of the year. We're investing Q1 and Q2 in improving how the funnel operates to scale more efficiently. This means refining conversion, sharpening pricing, and developing adjacent services to bolster unit economics. You'll also notice we've updated how we present accountable.opendoor.com. We replaced the cumulative projections chart with a single view that shows weekly actuals, a fitted trend line with its slope, and a projected range for where we plan to be. Cumulative charts can mask what actually matters, whether we're accelerating and whether we're progressing towards our year-end targets. This view shows you both. We'll update the projected range each quarter as we learn more. On revenue, we expect a decrease of approximately 10% quarter over quarter. This is a direct function of entering Q4 with low inventory levels due to the prior high spread acquisition strategy and the successful clearing of aged inventory in Q4. We're focused on scaling acquisitions throughout Q1 to rebuild inventory with higher quality homes that underpin our improved unit economics. Contribution margin. The mix of old inventory versus fresh inventory drives margins, and Q1 2026 will reflect this shift. We made a concerted push in Q4 to clear legacy inventory. The homes we're selling in Q1 2026 are more representative of our new model, higher quality and faster turns. Our contribution margin bottomed out in September and has been improving every month since. We expect to exit Q1 with the highest contribution margin we've posted since Q2 2024. Finally, on adjusted EBITDA, we expect Q1 2026 adjusted EBITDA loss in the low to mid 30 millions. This represents continued sequential improvement as we maintain cost discipline while simultaneously investing in automation and product velocity. Last quarter, we showed you the blueprint. This quarter, the house is going up. Our goal remains adjusted net income profitability by the end of this year on a 12-month go-forward basis. We have a lot of work ahead of us, but the proof points are building, and we intend to keep earning your confidence every quarter. With that, Michael, I'll turn it over to you for questions.
Great. Thanks, Christy. Okay, we've had a handful of questions that center around a common theme. We grabbed 2 of them. First, Zach H. asks, where is Opendoor at currently compared to expectations and profitability, and where would you like to be? And Ryan Tomasello from KBW asks, according to your accountability dashboard, acquisition contract volumes are running at or below the low end of your targets. Aside from seasonal factors, what are the primary macro or pricing drivers preventing a faster ramp?
Yeah, thanks for questions. Look, to be blunt, we're right where we need to be. We're on track. If you had told me 3 months ago that we'd be here, I would have told you you're being a little too optimistic. Last quarter, we laid out a 4-step plan, and I think we're agreeing across all 4 steps. We did what we said we would do, and it's working. Our contribution margin bottomed out in September. It has improved every single month after that. We're going to exit Q1 with the highest contribution margin we've had since Q2 2024. Look, it's early, but things are going well. And to be clear about it, this isn't the macro helping us. This is us helping ourselves. So to answer your question, the reason we said our goal was adjusted net income profitability at the end of this year on a 12-month go-forward basis is because that is what needed to make sure Opendoor starts generating cash and doesn't need to raise equity ever again. That's our goal. But just like Google Map finds you different routes to get home, we're finding the best route to get home. And actually, let's take a step back before that. Before we become ANI profitable, we're going to become adjusted EBITDA profitable. Now, I think adjusted EBITDA is not the best metric for measuring our business, and I'm not about to give you guidance. I think our lawyers have very particular feelings about me saying guidance. But to be transparent about it, the plan I have on this laptop right now has us being adjusted EBITDA profitable on the annual basis starting in Q2, right? So things are going well. Things change, and company building is a little messy, but things are going really well. Now, I think there's a question behind a question. There's like an actual hard question here, which is, why are you at the bottom end of your acquisition goals? Let me say 2 things. First, I reserve the right to wake up smarter every single morning than I was yesterday. I want to learn. And I've learned a lot in the last 3 months. I've learned that the levers we have at our disposal are genuinely working faster than I expected. And we've discovered we've had levers that I didn't think we would have. So if we want to hit the top end of the range, we could do it very easily. But that would come at a cost. And I want to tell you about the cost. Okay, so in a product company, you always basically have 2 choices. You can invest in product or you can invest in growth. That's the back and forth, right? Engineers are your most precious resource, and they can usually work on one of 2 things. And like, here's what I mean by this. Like, when you invest in product, you're putting fuel in the tank. When you invest in growth, you're spending that fuel. And this is actually like a key difference between product companies and not. Right now, I want to invest in having the best product we can before we go and invest in growth again. So I'm choosing to work on the funnel rather than the number that just happens to come out at the end of the funnel. Let me give you an example. This actually matters. So early in January, we took 4 engineers aside, and we asked them to work on our mortgage product. Those engineers could have worked on the Opendoor app. And I think the Opendoor app is genuinely bad. And fixing it would be good, and it would lead to growth. But we bought 500 homes last week, and growth is going well, and we have lots of levers. So we chose to work on our mortgage product and our infrastructure over the Opendoor app. And because of that, we're going to launch our mortgage product in beta this week. Okay, let me be blunter. We built a mortgage product in less than 10 weeks. People told me it would take at least a year. We did it in 10 weeks. This is genuinely better for the long-term growth of the company than hitting the top end of the old accountable range. What matters to us is profitability. And in order to get there, the thing that matters is the pace by which we exit this year. What Christy just said, 6,000 last quarter. I am very confident in the levers we have and the levers we have built, and we can hit that pace. I'm very confident more than I was 3 months ago. That's why I'm so comfortable that we can take a moment to spend time investing in product to put fuel in the tank so we can burn it later. I promise I will never, ever sell the future growth of our company at a discount. We're going to do the right thing and focus on the things that matter. Look, our October results proved something. They proved that what we are doing is working. The bets and the actions we've taken are the proof points we need to know we can get to profitability. So we're going to invest in product and then growth.
Great. Our next question comes to us via video submission from Anthony Pompliano.
Hey Kaz, hope you and the Opendoor team are doing great. My question today is about artificial intelligence. Obviously, this has become really pronounced in the market, but what are you guys using it for internally, and how should that change the customer experience in the Opendoor product moving forward?
Thanks, Van. I think the best example I can give you for AI use is what's happening at Opendoor in underwriting. Give me some rope. I love football. I think it's a great sport. But I hate the fact that in any given football game, there's about 11 minutes of football and 3 hours of not football dressed up as football. And when I got here, Opendoor's workday was kind of the same. Like a lot of not work dressed up as work. A lot of toil that humans should not do anymore. Now look, every company says AI. It's like the buzzword of the day. And honestly, a lot of it sounds to me like BS. Look, real estate is basically the last industry that is untouched by technology, where we pretend humans have a better sense of what an asset is worth than a model that's been trained on decades of data. And for a long time at Opendoor, we pretended that was true too. But machines are better at some things than humans. Look, humans do taste. Machines do ETLing data, creating documents. Machines do math. Here's my principle. Humans do humans work, and machines do machines work, right? And like human work is the work that machines cannot competently do yet. So what can't they do yet, for example? The last mile of our work they can't do yet. So the house that backs onto a highway. The machines are bad at valuing that asset. That's where human judgment comes in. Our problem at Opendoor was never that we had humans in the process. The problem we had was that we had humans doing the wrong part of the process. So what have we changed, right? Our analysts are no longer doing valuations today. They're auditing what AI has prepared. They're working on evaluating the output rather than doing paperwork to prepare the input, right? To go back to football, oh, this is fun. AI kind of lets us run a no-huddle offense faster and more efficient, but the QB still calls the plays. So I think you asked, what should investors expect? Like naturally what customers should expect first, because that's actually more important. Customers should expect a fair and fast offer with fewer errors. Investors should expect declining operational expense as a portion of our revenue, like we talked about, and a company that doesn't move as slow as the San Francisco BART. So, oh, and there's also a separate thing. I think there's a key thing folks don't appreciate about AI. AI constitutionally destroys some businesses and improves others, right? If you're a point solution selling SaaS, I feel sorry for you. But if you deal with a real world where the primary problems are pricing and operational complexity and variance, AI is basically like manna from heaven. it's the thing we need to make the business work. I'm going to stop now.
Great. Our next question comes to us via video submission from Catherine M.
Hi, I'm Catherine Morgans from Portland, Oregon. I became a shareholder in Opendoor in 2021. I was inspired to invest in the company following my experience using Opendoor to sell my home. It was the most streamlined and painless home selling experience that I've ever had, and I cannot imagine, should I ever need to sell a home again in the future, using any other option. I've been following the progress of Opendoor mainly via the Datador Discord, and it's been very thrilling over the past 6 months to see all of the innovation, especially with the improved implementation of AI to enhance operations and sharpen modeling. So, as far as I'm concerned, things are looking very good on the, let's call it the software front. My question has to do with, let's call it the human front or the customer front. And that is, how do we get to the point where sellers think, I'm going to try Opendoor first before even considering going via a realtor? How do we turn that corner where Opendoor becomes the default first option that people try when they're ready to sell their home?
Yeah, that's a great question. Defaults are incredibly powerful. And usually folks talk about defaults the way they talk about brands. You use a Kleenex, I Venmo my friends, I put a Band-Aid on my kids' legs basically every night. I want you to Opendoor your home. But brand is just another word for reputation. And reputations are earned backwards, not forwards, right? You can't spend your way into having a great brand. Otherwise, all of you would be watching me right now on Quibi. Look, selling your home is one of the most important financial decisions for average American families. Selling a home it's an act of trust, right? And historically, folks have placed that trust in people, not software. Opendoor exists to build software worthy of that trust. And to become trusted, you need to have lots of people use your product, lots of people be delighted by your product, right? So my favorite example of this is Jeff Bezos and Sam Walton, right? The best marketing is a product that delights you. Jeff Bezos didn't spend money on advertising. He spent money on making the product fair and fast. Same with Sam Walton. So for us, if we want to be the first place people go to, we need to kind of earn that same level of trust. And that for us starts with the offer. The offer is a product. It needs to be accurate, fair, reliable. It needs to feel great. And if I'm being honest, we're not the default yet, but we're on the right track. I know we're on the right track. Let me tell you why. In markets that we've been operating for a while, in our mature markets, 20% of folks who go on to list their home before they call a person, they try Opendoor.com. That's the beginning of looking like a default, right? As we expand more markets, we'll get there. But so how do you become the default? That was your question, I think. I realize I've been talking for a really long time. So in order to become a default, you have to do a few things. First, you have to be available. At the end of last quarter, Opendoor wasn't available everywhere. So we expanded all over the lower 48. We're available to almost everyone right now. Second, you have to remove every point of friction, right? Opendoor needs to make a fair offer, a good offer, a real offer fast. Trying Opendoor needs to be a delightful experience for our sellers. And last, you need to consistently deliver value. You need to be a fast transaction, better pricing, great services, including an amazing mortgage product. And our new unit economics help us do that, right? Better unit economics means better offers. Better offers build trust. Defaults follow trust, and trust follows great products.
Great. Our next question comes to us from Tian He. With the stock down significantly since your tenure began, how should investors assess progress? What key metrics best reflect operational improvement? What is the strategy to restore market confidence?
I mean, look, let me just answer your question a bit personally first. I am very highly motivated to see Opendoor's stock price go up, right? My family is the most levered family in the world on Opendoor stock. My salary is $1, and unless stock levels see levels they haven't seen in years, I don't get paid. So I don't want you to take what I'm about to say the wrong way, but I just want you to let me say this. I don't manage the stock price. I manage the business and look at what we're building. Now, my responsibility is to create shareholder value. That's literally my job, to create value for shareholders whom I deeply appreciate. But I fulfill that. I fulfill my responsibility by not looking at the stock price every day. I fulfill it by building something people want and value. The stock price will follow. It literally always does. My favorite book, one of my favorite books, is a book called The Score Takes Care of Itself. I have it on my desk. It's in our library at Opendoor. It was written by Bill Walsh. Look, Bill Walsh didn't win Super Bowls by telling his team to focus on the scoreboard. This is a football-themed earnings call. His whole philosophy was simple, execute the right way, take care of everything, the score takes care of itself. And I'm pretty sure he won more than 82 games. The stock is not the company, right? Jeff Bezos didn't become a worse CEO when Amazon stock dropped 90%. I bet you he didn't even flinch. He kept building. And the stock eventually reflected the business, not the other way around. Now, I've been here for 4 months. In that time, we've demonstrated clear evidence that the model we are building is working and the business is structurally improving, right? But how should you judge our progress? I think that was the question. I don't think you should do it by where the stock is today, but you should think about whether the underlying business is getting structurally better. I've given you how I would grade us, but I genuinely, honestly think you should find a way to do that too. You should build your own model on us. But I want to be transparent about this. My job is to build a company that can host a product that people want. My job is to improve the economics of that business. And everyone here, everyone who works at Opendoor is focused on executing. The score will take care of itself.
Great, thank you. Next, Victoria B asks, if home prices drop another 5 to 10% nationally, what happens to your margins and inventory risk? How prepared is Opendoor for that scenario?
Thank you for the question, Victoria. It is the right question to ask. Opendoor 2.0 is built to move homes, not hold them. The longer you hold when the market turns, the more it hurts. So the whole game is turn faster. And here's what's genuinely different now. We have more tools than we've ever had. Previously, the primary lever was spread. Price conservatively enough to absorb a market move, and that works, but it's blunt, and it has terrible adverse selection. We now have a broader toolkit. First, selection. Under Opendoor 2.0, we are a more tailored approach. We offer strong prices on high-quality homes where we expect faster resale velocity, and we maintain wider spreads on homes with more risk or slower clearance expectations. Second, velocity. We reduced homes on market greater than 120 days from 51% to 33% in a single quarter. Our October cohort is clearing at 2x the velocity of October 2024. A home we own for 45 days has fundamentally different risk exposure than one we own for 180 days. And as we grow volume, the goal isn't to hold more homes, it's to move more homes. Scale and velocity compound together. Third, cash plus. This is an underappreciated as a risk management tool. When a seller opts in, they're retaining more of the price risk, and we earn fees with less capital at risk. That structurally shifts our exposure. Are we immune from a 5 to 10% decline? No, nobody is. But the question isn't whether it hurts, it's whether Opendoor is structurally positioned to navigate and withstand it. The October cohort is a great example of this. Over the past 5 months, national home prices came down roughly 300 basis points. During that exact period, our contribution margins on that cohort held steady or slightly improved. That's not hope or an expectation, that happened.
Great. Our next question comes to us from Andrew Boone from Citizens, who's wondering, there's some testing of a mortgage product with Lennar. Where is Opendoor in extending the services opportunity? What should our expectation for 2026 be for Opendoor to be able to attach more adjacent products to transactions?
I feel like I'm now on a football theme, so I need to find a football analogy. I just don't have one. Okay. Look, like I said, we started building our mortgage product in January, and we're going to launch it in beta this week. I showed it to Christy last night. I'm very, very bullish on this product. I think it's going to be good. It's going to take us a second to get all the right things, because that's how products work. But I'm very bullish, and we're going to have more news on this soon. I think there was a part of the question that was about unit economics. Let me hand wave, because I think the unit economics of the mortgage space are like relatively well understood. We're going to do some special things about them, but let us tell you about them when we do those things. So I think the primary unknown question is this. What will be our attach for mortgage and adjacent products, right? How many people who buy or sell a home from Opendoor take a mortgage from us? I have a hypothesis, but not a good answer. I've done this a couple of times, but we're going to under-promise and over-deliver here. But separately, I think there's a very likely that there's a world where we have partners, especially our home builder partners, that use some of the software we're building. We're building a new stack with the help of some partners, and it will be more finely tuned to people who own assets they're selling than a typical mortgage stack. I still don't have a football analogy.
We can come back. Our next question comes to us from Dae Lee from JP Morgan, who's asking, what has stood out to you so far about the quality and profitability of the homes you're buying since ramping up acquisitions? Any surprises as you've picked up the pace, and have those led to any changes in your approach? And looking ahead, what are the key factors or milestones you're watching most closely to gauge progress toward your current profitability and margin targets?
Thank you for the question, Dae. As you may have noticed, the October 2025 acquisition cohort is something we've been paying a lot of attention to, and that is because that's the first cohort where we had the offers, the contracts, the acquisitions, and now 50% of the resales are under the Opendoor 2.0 model. So it is a very important source of data for us. The performance of this cohort isn't just one thing, it's everything working together for the first time. So I talked earlier about selection and spread dispersion, but we are targeting higher quality, higher velocity homes so that we can turn them faster and get better selection. When you have better selection coming through the door, that really improves our operations. Those are homes that we can get relisted faster and have less variance in outcomes. And then it comes to the resale systems and our ethos. We as an organization fundamentally believe that it's better to identify a margin optimized clearing price than to wait around for the perfect offer to come along. And so our machine learning pricing model, it has meaningfully improved the precision of pricing decisions. Better demand signals, better timing, and better calibration at the individual home level rather than blanketed spread reduction or price reductions. The result, resale velocity in our October cohort was 2x what it was in October 2024, and with margins that exceeded our expectations. And so that puts to rest the idea that speed and margin are a trade-off. We've shown the answer to both can be yes in a market that, frankly, no one would characterize as particularly strong. To answer your question about surprises, I think what surprised us was how quickly some of the changes we put in place showed up in our results. For example, the degradation. And so when you have a cohort of homes that you buy, you expect the homes that you sell right up front to probably perform a little bit better than the homes later in the cohort. But in this last October cohort, we saw that from 10% to 50%, our margins basically held flat. They were actually up about 18 bips. And that was during a tough market. And so seeing that flat degradation was very promising. Finally, you asked about looking ahead, and I guess I would just bring us back to our management objectives. Scale acquisitions. We've said we want to exit the year with 6,000 acquisitions per quarter, and that will set us up well for our adjusted net income profitability. As a reminder, we're now available through the lower 48, and we'll start leaning into marketing in Q1 as we expand to reach those markets. Objective number 2 is improving margin and resale velocity so that we return to our 5 to 7% targeted CM. And objective 3, build operating leverage as we rescale. Fixed operating expenses flat or down, and trailing 12-month operation expense flat as a percentage of revenue or down.
Great. Our next question also comes to us from video submission and will be answered by Brad Bonney, Opendoor's Chief Business Officer.
Aloha ko Opendoor. My name is Kupa'a Mekalana Kila. I'm here with my daughter, Eva, and we're in Ohana from Hawaii that relocated to Tennessee. We purchased with Opendoor a few months ago because of the convenience. We tried the traditional way many times, and we stumbled upon Opendoor. It allowed us just unlimited access to the property we're looking at. Speed of response, and it's just the easiest way to work with. We didn't need any realtor. We didn't need our attorney to help us. It was just us and Opendoor. And we're promoting Opendoor a lot to our whole Ohana because this is new to us. This is a new way of buying and selling or relocating. And because of that, that's what got us to also invest into the company, because we saw something brand new, something convenient, and something totally different that goes against the traditional way of buying and selling. My question to Kaz is, as you know, I'm a veteran. A lot of military people have to move. We come on orders really quick. And I see this being a great platform for a lot of military people, veterans, active duty. What is Opendoor doing to help our community? I really appreciate the time. Aloha, mahalo ke akua. Talk to you guys later. Aloha.
Hi, Kupa. Thank you for your question, and thank you for your service. As a fellow veteran who spent more than 7 years in the Navy serving primarily on a nuclear submarine, I know what it means to raise your hand and say, I will go where you need me, when you need me, for as long as you need me. That commitment makes the American dream possible for all of us, and it shouldn't come at the cost of the dream itself. Nearly 400,000 service members PCS every year. That's almost 500,000 families navigating a home sale on a timeline they don't control. The traditional real estate process wasn't built for that reality. Opendoor was. Fast offers, close dates you control, and certainty in an otherwise uncertain transition. Here's how we're helping. We've already launched the Heroes Home Credit. This is a $4,000 credit towards closing costs for active duty service members and veterans buying an Opendoor home. That's not just some marketing gimmick. That's Opendoor recognizing that military families already absorb significant out-of-pocket expenses every time they move. They shouldn't have to sacrifice when buying their next home too. We're building from there. We're working hard to make sure VA loans work seamlessly with Opendoor because that's how many military families buy. These are some early steps, but we really need to continue to build trust with the military community. Trust doesn't happen with ads. It happens through word of mouth. One soldier tells another how easy it is to sell their home. One sailor tells her shipmate how they seamlessly moved their family across the country. And each time, it's Opendoor who made it happen. That means the most important thing we can do is exactly what we've always said. Build a product that actually works for the people who need it most and deliver on every promise we make. Every military family we help becomes an advocate, and every advocate helps spread the word. Kupa, your question today is exactly what this looks like. Thank you, and thank you again for your service to our country.
Great, thanks, Brad. I think we have time for one more, and Zach H. is wondering, where do you expect to see Opendoor in 2 years?
That's a great question. That's actually my favorite question. Before I answer that question, I want to say something. One of the things that makes me deeply proud of working at Opendoor is the number of veterans that work at Opendoor. We deeply recognize that freedom isn't free. So thank you, genuinely thank you. So where will it be 2 years from now? And what do I expect? Well, 2 years from now, I expect to be sitting in front of you, telling you that we delivered exactly what we said we would do. 2 years from now, I want Opendoor to be the default that we talked about. I don't want to have to choose anymore between margin and volume. 2 years from now, we're going to get both. 2 years from now, the AI infrastructure we're building right now is going to have a compounding effect across our cohorts. We're no longer going to be talking about the model. We're going to be talking about scaling it and how we can serve as many people as we can. And we're going to be okay with the people who doubt us now taking credit for our work 2 years from now. But the most important question for me genuinely is where homeownership is going to be 2 years from now. Will a teacher living in Kansas City be able to afford a home on her salary so that her kids can grow up in a home owned by their mom and dad? Today, the answer to that question is no. 2 years from now, I hope I can stand in front of you and say the answer to that question is yes, because then our work will have mattered. Okay, thank you, thank you. Thanks for putting up with us. We'll see you in 3 months. Cheers.
Cheers, mate. Cheers. That was alright. Make sure you guys hit the like button on your way out. Appreciate you guys being here. Have a good rest of your day / night, wherever you reside in the world. That was a pretty interesting earnings call. Opendoor's kind of interesting. Would I invest in it? Probably not. But maybe if the stock price dropped quite a bit more, maybe I'd consider it. But I don't know. It's all talk until they actually perform. It's all talk till they actually perform. But decent earnings call. Is there even anyone here? It says there's 100 people in here, but the chat is dead, so is there even anyone here? I'm about to leave. If nobody's here. Well, I think I'm gonna leave anyway. I don't think there's anything to talk about. Sup, Ruben? Sup, Ruben? I don't understand the loss over $1 billion part. I don't understand where they got. Well, I typed it in chat, but they repurchased senior notes, so technically they only lost like 100, 200 million. But they probably already had the cash, maybe, or maybe they didn't at the money. I don't know. I don't track this stock, so I don't really know. Thanks for the call. Thank you for being here, bro. Thank you for being here. Hey, thank you, Jay Canna. Appreciate you. And the Odd Society, thank you. Hope you guys have a good rest of your day. I'm like you, that I'd rather buy more GME. Oh yeah, definitely. I'm not interested in investing. I mean, yeah, Opendoor has a long way to go. Even if they do become profitable, like how much are they actually going to be profitable per year? Very debatable. I'd rather invest in a company that's has the prospect of making billions in the future, not a few hundred million. Like I said, if the stock price drops and they're sitting at like 2-3 billion market cap, maybe that would be pretty interesting. But at a 4 or 5 billion market cap, Opendoor is not interesting. Didn't someone say there's an article? I don't know if it's an interview. No, it's not an interview or anything. It's just a reporting on what's happening. Maybe we'll read that tomorrow or something. I don't want to read it now. I think I'm going to get out of here. There's really nothing much to talk about. We've already been streaming for over 5 hours, so appreciate you guys, though. Thank you guys for always supporting the stream. Shout out to the new people. Thanks for stopping in. Hopefully we'll see you again. Appreciate all my OGs. Thank you guys for always supporting the stream. I really appreciate it. And I hope you guys have a good rest of your day, night. And I'll see you guys tomorrow for, I don't think there's anything tomorrow. I think it's just Friday. Fridays are generally pretty boring, so yeah, no earnings really tomorrow. So probably just hop on stream for like an hour or two and see what's going on. But yeah, I'll catch you guys tomorrow. Have a good one. God bless ya. Peace.